Hello everyone and welcome back to the channel. Today I'm gonna walk you through a real case interview exercise that I received from one of our viewers. He asked me to do it on my own so he can check with his own answer. This is a very interesting exercise because there's a lot of nuances and takeaways that you could present to the employer to enhance your application and show how much you know about the exercise. So if you want to learn how to do it from beginning to end, stay tuned. But before we get started, please make sure to subscribe to the channel and give me a thumbs up if you learned anything from today's video. Let's go and get started. So we're going to divide the video in three different parts. The first one, we're going to go and read what the exercise is asking us to do. You can follow through the video or you can just skip to the next one and read on your own. But it's very important that you read what's being asked because then you can already start thinking how you're going to structure the whole financial model and what exactly you're being asked to do, right? Because that's what you have to answer. So I'm going to read through, but you can skip. Then we're going to start building almost from scratch the financial model. So if you want to, you can download this file together with the instructions by clicking on the link below. But if you also want to have the final version of the file, you can purchase that by using the same link. So it's really up to you. And I really would encourage you to do it from scratch and just follow through the video. And lastly, and I think the most important thing is like the takeaways. So I'm going to put myself in the shoes of the candidate and try to answer and enhance my answers and really think through the results of the exercise. So if I were to have the chance to be interviewed by the employer, what I would tell the employer, right? So how I would go about which project I would choose. I would choose project A or project B. So I knew you're gonna see why I'm telling this right now to you, because this is a very nice exercise and it gives you the opportunity to really show to you that you know what you're talking about and that you have experience. So I think the takeaway, it is really the most important thing. So let's gonna start now by reading the exercise. So this is the exercise. Let's see what this is asking us. Modeling XM. You're asked to evaluate two projects. Project A is a 40 megawatt wind plant located at X location, and Project B is a 50 megawatt wind plant at location Y. The business development team has also requested the potential gains of scale of developing both projects. Project A is projected to have a total cost of $1.85 million per megawatt installed, while Project B is estimated to cost $1.65 million per megawatt. If both projects are undertaken together, cost savings will reduce the total capex by 5%. The construction time is on year one. So all these numbers are already in the input sheet of the Excel file provided in the link below. So we have the installed capacity, we have the construction timeline, and we have the cost with the discount. Okay, so let's gonna keep on. Revenue assumptions. Project A is expected to have a capacity factor of 37% in the first year. There we go, we have here. From the second year onward, the wind turbine generators are expected to experience an annual degradation of 0.75% due to normal wear and tear. This means that the net generation of the power plant decreases by this rate each year based on the previous year's value. So here it's important because it's basically telling you how you should calculate the degradation. Project B is expected to have a capacity factor of 32% in the first year. Based on the current market conditions, the entire output of the plants can be contracted at a rate of 4 TAI per kilowatt hour with a 2% escalation. The contract term matches the plant's lifespan, which is 30 years. So a few points in here. So first we have all the numbers that were given to us in these sections over here. So we have the 37%, then we have the 0.7% degradation, we have the 32% capacity factor, we have the revenue, the escalation, and the lifespan over here. Second, we were given the degradation of project A, but has nothing about degradation for project B. So let's going to keep that in mind. So that's the first thing that already catching my attention as I go through the exercise, right? So I'm already thinking about this. Okay, I do have the degradation for project A. What about degradation for project B? Okay, let's gonna keep moving on. Operating cost assumptions. The plant will be staffed by various personnel with an estimated cost of 8 Thai million per each plant in the first year. If both projects are implemented, the company can save 3 million in personnel costs start from year 1 due to operational synergies. Okay, so we have those numbers somewhere over here. So we have them over here, the 8 million, the 3 million savings, which is, okay, so employees are expected to remain for the entire duration of the project, with salaries increasing by 3%. So we have the personnel escalation on row 44, which is higher than the inflation rate of 3%. Okay, so we have, sorry, 2%. We have the inflation rate over here. So when I read this, the first thing I'm asking, okay, so should I escalate the employees' costs by 3% or should I escalate it by 3% plus 2%? So that can be something that we can think of. I think the way it's written here, we should only escalate by 3% because it's clearly saying that the escalation of the salaries is going to be higher than the inflation rate. So in this case, I wouldn't add them up, but there might be room to do so. Okay. Maintenance costs for the plants are expected to be 50 million for project A and 25 million for project B. So we have the numbers over here in the first year, with costs expected to grow in line with inflation thereafter. Land leases, let's see. The landlord has indicated that the lease will increase by 5% per year. I think that's over here, with a base rate of 4 Thai per square meter. So that's what we have over here. And these are calculated already, the yearly cost. Very nice. Each project requires approximately 15,000 square meters. I also have the number over here. Miscellaneous expenses for each plant are estimated at 0.6 Thai million for the first year, with costs expected to rise with inflation. Very good. To foster good relations with the host communities where the plants are to be built, the company has committed to donate 0.25 Thai per kilowatt hour. Let's see where we have this number. So we have the number over here and the 0.6 down over here. Income tax is set at 10% of taxable income, regardless of whether it is positive or negative. Okay, so what does it mean? Let's see if there's more explanation going down, but I think what it means here is that it should not carry over or carry the loss forward. Okay, I think you can assume that you're going to be able to take this loss and net it off against some other net income that you have. Let's see how that goes with a tax refund applicable for negative tax. Okay, so that's over here. The plant will be decommissioned and scrapped at the end of its 30 years lifespan at a net cost of 5% of the original cost, adjusted to inflation. So basically what they say here is that we're going to have to get 5% of the capex, escalate it to the last operational year, and then we're going to have to, as a cost, we're going to have this number as a cost to decommission. So it's going to be an operating cost to the project. Debt finance assumptions. To fund the projects, the company plans to secure a loan covering 50% of the project cost. Okay. Due to a favorable relationship with the banks, the interest during construction will be waived. Interest expense will commence once the plants begin operations, calculated based on the beginning balance of loan each year and paid out at the end of each year. Okay, that's fair. The loan principal is to be repaid in equal installments. Okay, so the loan principal should be paid with equal installments over 15 years. Start from the date the plant becomes operational. The agreed upon interest rate is 4% per annum. No refinance is anticipated in the future. Very good. So we have all these numbers over here. So we have the 50% debt ratio, we have the 15 years tenor, and we have the 4% interest rate. Accounts receivable are collected 30 days after each month, and the company pays its maintenance costs after 30 days. Okay, all other costs are paid within the same month it's incurred. Okay, that's very good. Other assumptions. Dividends will be distributed at the end of each year, provided there is available cash. Dividends will be paid from the company's retained earnings, with the amount equal to the lesser of the cash available for dividends and the retained earnings balance before dividends. So this is quite important, right? And what it's telling us is that you're not going to pay dividends out of the cash flow available for the equity. You're going to pay dividends of the lesser, or the one that is minimum, between the cash in available for dividends, or the cash flow available for equity, and the retained earnings. Okay, so that's something you have to consider and think through. No minimum cash balance is assumed. Okay. It is assumed that the company operating the plant will be liquidated at the end of the 30 years lifetime. Okay. At liquidation, all assets will be liabilities. All assets and liabilities will be settled at their book value. Very fair. The exchange rate is assumed to be constant. That's wrong. That should be, this number here is wrong. Should be 4. Sorry, it's correct. That's correct. So let me see if I have the number here. It's 36. $1 equals to 36 Thai. That's fine. Other instructions assume a 365 days per year. Fine. Convention where all cash flows for each year are assumed to occur at the end of the year. Okay, that's good. Equity hurdle rate is 15%. I have the numbers somewhere below. Let's see. There we go. So here we have, so that's the income tax. We have here the equity hurdle. Questions below are from the perspective of the equity shareholders. Use the free cash flow to equity. Fair. Round NPV to whole amounts and IRR to whole percentage amounts before answering the question. So that's quite an important one. It's just, I think, to calculate the returns. If there is anything unclear about the case or assumptions, you can make your own assumptions. But please write it down to let us know which part is unclear, what you assumed and what you assumed and why you assumed it. Very good. So these are the questions. Let's go for the questions now before we finish. So the first question, build a complete 3 financial statement for projects A, B, and AB using all the information provided in the template. Okay. Consider project A in isolation. So they ask for what is the NPV? Would you accept or reject the project and why? And the same for the IRR. Then it's going to ask you to do the same for project B, and then the same for project A and B together with the synergies of cost. Bonus, give 2 differences of projects A and B that the BD team should look in order to potentially increase the returns of the project and why. So we're going to think it through. This is not graded. Are you familiar? Okay, this is just blah, blah, blah. It doesn't really matter. Okay, cool. So we have read, and now we can basically start doing. So we already have the full inputs of the file. So we have everything we need to start doing it. And we also have some technicalities here where I basically named some cells. Okay, I'm going to show you right now. So you can see here I have the names of the cell names to facilitate, to make it easier our life when we're doing it. So that's going to now start doing the Excel file or the financial model as it was asked by the company. Now let's gonna fill out some of the empty cells that we have on the input sheet, and then we're gonna go to building the timeline, so where we can lay out all the cash flows for the project. So that's gonna start by laying out. I'm gonna also give some namings for the cells. Okay, that's very important. It's gonna make our life much easier later on, and we're gonna understand. Okay, so that's one tip I give to you. Always name cells whenever you can. For example, I'm going to start naming right now for this one here, the G4. I'm going to press Alt F3 altogether. We're going to see that's going to highlight this field here, and I'm going to call it capacity project A. Now I'm going to project A. I'm going to Control A to select everything, and I'm gonna Control C so I can copy, enter, and I'm gonna go to the cell next to the right, and I'm gonna do the same. I'm gonna press Alt F3. I'm gonna paste now what I copied. I'm gonna delete A, and I'm gonna change to B, and I'm gonna go to this one here, and because it's gonna be equals to the sum of project A and project B, we need to start preparing all the data for both projects because that's one of the things that was asked to us. So I'm gonna add them together, and I'm gonna also name it. It's gonna be capacity project A, B. Very good. Then we have our operating years. I can also name it. So ops, I can just make it shorter. Ops years. We have construction years. Sorry, it's wrong. Should be construction year. I'm gonna just cons years for year. Then we have construction timeline. I'm not gonna change on this one. I'm gonna use this basically once. And I'm gonna have the exchange rate. I'm not gonna name this one here too because I think we're gonna only use the exchange rate over here. But actually, I'm gonna do it because it gets clear. So exchange rate. Very nice. Then we have capex project A. So Alt F3 again. So capex project A. Control C, Control C, sorry, Control A, Control C, Enter. We go to the next one, Alt F3 again, Control V, and this is going to be project B. Okay, very nice. Now I have to calculate exactly how much each project is going to cost because remember this is million USD per megawatt, and here we're going to have the project, everything's going to be done into Thai, okay, million Thai. So let's gonna calculate this one here. So let's gonna see how we're gonna go about it. So we're gonna get this number. We're gonna go for the capacity, because you can see here I already grabbed the capacity for project A times the cost for project A, right? And then now we have to do what? We have to multiply by the exchange rate, right? Because that's what we're gonna calculate. So it's gonna be 2.644 million. And I just need to make sure that the unit is correct. So we have megawatt, then we have million per megawatt, and here we have Thai per USD. So let's gonna check if this is correct. So the exchange rate here seems to be correct, right? But the way I usually do, like when it gets a bit confusing, right? So I can just write the units here. So we have the capacity is in megawatt, then we're gonna have the million USD per megawatt. So these two are going to cancel each other, right? So we're going to have million USD, sorry, and then we're going to have what? We're going to multiply this by the Thai per USD, right? So the USD goes over here, and then what's left, we're going to cancel the USD with SD. So what's left is the million Thai. So the unit is correct. Very nice. So always double check just to make sure everything's correct. Then I'm going to have the cost for project B. So then we're going to have the cost for project B. I can press Ctrl D to copy what is above, but we have to change here now. This should be B, and of course this should also be B. Okay, so we have the cost, and here we have the discount. So this should be an input. So I'm going to change here to an input. We have a 5% discount. And I'm adding those things together, and then I'm reducing by the discount rate. Okay, let's move on now. So we have the revenues over here. So the capacity factor for project A is 37%, and with this number basically we can calculate the generation, which is going to be equals to what? It's going to be equals to the capacity times the number of hours in a given year. So I think I have already a cell that calculates, a named cell that also calculates that, right? So I'm going to show you where that is, then times the capacity factor, right? So I'm going to click over here, and that's 129,648, and the number of hours in a year is this cell over here, and as you can see we do have the named cell there. Very nice. So degradation, that's out of date. I can delete this one here, so don't worry about that. And we can delete here. Oh, sorry, no, that's okay. I mean, this says that the degradation starts from year 2, so we can leave this here for now. Not really sure if we're going to need it, but let's gonna leave it there. Cool. So now we can calculate the generation for project B, which is going to be equal to the capacity of project B. You can also type CAP, move it down, and press tab, then hours multiplied by hours in a year, press tab, times the capacity factor, which is the one above. There's something wrong here. Oh, what's wrong? Oh, it's not capex, it's capacity. So let's do again, capacity of project B. Okay, so very interesting. See what's interesting here. Okay, so that's what you have to start thinking through when you are doing the modeling. Even though project B has a higher installed capacity than project A, the generation is lower, right? Because of the capacity factor. So that's one thing you have to think through and see how that will impact on your financial modeling, because sometimes you see some odd numbers in the financial model and you have to be able to justify it. So this thing here will definitely bring some change or some things that doesn't look right in the financial modeling. We're going to address that later on. Degradation of project B. Okay, remember this is not given in the instruction, so we're going to have to assume it. And the assumption here is that both wind or the wind turbine generators, they are of similar technology. Okay, so the same basically should be the same model. Okay, not even the same manufacturer, but the same model. And I'm going to assume this is the same. Okay, so we're going to just make it equals to this one over here. And what I want to do now, I want to name the range, right? So we can keep the depreciation for first year as it is, and we're going to name it. I don't think we need to name the capacity factor, but I will name the generation. So I'm going to press Alt F3. It's going to be the generation project A. I'm going to Control A, Control C, Enter. And now here I'm going to have the Alt F3, Control V, but this is project B. Very good. Now we're going to have the revenue. I'm going to name it Alt F3 again. I'm going to write revenue per kilowatt hour. Good enough. Then we have the escalation. So this is per annum. Sorry, this should be over here. Per annum, so it's going to be a 2%. Can get rid of this. So this is the revenue escalation, right? So this is revenue. This is going to be revenue escalation. Good. Then we're going to have here the generation of project A plus project B. So it's going to be equals to this times or plus this, and I'm going to name it too. So generation project AB. Okay, there we go. Let's going to continue to the next one. So we have operating costs. So we have personal costs for each one of the power plants is 8 million euros or Thai. Then we have a discounting for savings, right? So what I'm going to do here, I'm going to name it. Sorry, it's going to be name. So it's going to be personnel cost. It is going to be okay, don't need it. And then we're going to have the personnel cost for this should be for project A plus B, right? And this is going to be equals what? Equals to this, sorry, equals to this minus this. But is this correct? So let's see, this is the personnel cost per project, okay? It's not for both projects. So basically what we have to do here, we have to multiply this number, the personnel cost, by 2, because that's basically for both plants. And then you have to give the discount for the synergies. So that should be the final cost, 13 million Thai per year. We have the personnel escalation. I'm going to leave it as it is. Then we're going to have the maintenance cost for project A. I'm going to name it maintenance cost project A. I'm going to Control A, Control C, Enter. Enter again, Alt F3, Control V, change to B, Enter. And here we're going to have there should be an in-sheet calculation. We're going to add them together. And this can be the sum, right? Because I just add them together. There is no synergies in here. but I will press Alt F3. This is gonna be maintenance cost project AB. Enter. Then we're gonna have the inflation. I'm gonna name it to inflation rate. Right. Then we're gonna have the land cost per square meter. There we go. That's 4. So this I have to change the formatting, and just notice here how I'm making sure that all the cells are properly formatted. Okay, I've done this in the beginning for you guys in the input sheet, but there are some things that are off, and I will keep doing it whenever I see a cell that is not properly formatted. I just change it. Okay, and a very good practice for you is to have the shortcut to have here the cell style, okay, in the top bar over here, because it's very easy to access. If you press Alt, and then you can see here number 1 is for the painter, number 2 is for the cell style, and I press 2, I gain access to it. Okay, so that's the first thing. And the second thing is, notice how many times I don't use my mouse. Okay, that's very important for you because that gives you speed. Okay, I'm gonna have a video later on where I explain to you how to do it, but it's very important for you to know how to navigate your model using your mouse without touching, or touching as little as possible your mouse. Okay, so that's 2 things for you to pay attention to. Then we have the land cost escalation. That's okay, I don't need this, I think, for now. And we're gonna have the total land costs, the land cost per megawatt, right? Because that's how much land we're gonna, this is the land area, not the land cost. It's the land area per megawatt, and this is gonna go over here. Okay, and I can get rid of this. And remember, so look now, I have Alt. If I press 3 now, I just clean all the formats of my cell, right? So I can select by pressing Shift Space, and now I can delete it by pressing Ctrl minus. Okay, so these are some tips that you have to learn and try to use as much as you can if you want to apply for an analyst position or whatever position for financial modeling. Cool. Let's gonna calculate now the land cost for each one of the projects, and that will be, how can we do it? Let's see how we can do it. So basically we have to know how many millions per year we're gonna pay for the land area. So it's gonna be equals what? Equals the cost times the area. I guess that's the number. Is this correct? Let me double check it. There's something up here. So we have the square meters per year. Okay, I think I have to multiply by the capacity, right? And now I have to divide by million. I also already named the cell called mil, and that's going to be the million. Okay, so now I can press Ctrl D, but I have to change. So we're going to change over here, and this should be project B, right? Correct. And then we can just add up together. And again, there's a shortcut for you to add everything together, which is Alt equals Enter, and then we can add everything together. There's nothing we have to do here. We just have to calculate the scrap cost. That's going to be equals to what? The capex. The capex for project A is not this one here, should be, we already have, so capex, right? So capex project A over here. This is going to be times the scrap value. Very good. There should be something, capex project A, and doesn't look correct, does it? What's wrong here? What is wrong? Oh, okay, I got the wrong. This is total capex, should be okay. Should be the total capex. I hope I have total capex. No, so I have to let me name that first. So we're gonna name it because that's quite important metric. So here I'm gonna press Alt F3, total capex project A. I'm gonna Control A, Control C, Enter. Enter again, Alt F3, Control V, project B. And now I'm gonna also Alt F3, Control V, and I'm just typing B. So we have all the names that we need. Okay, so I'm gonna scroll down. Here should be the total capex project A. So now I have just to delete this thing. And there we go. Control D. And here should be B, and this should be the one above. Right, and this should be equals to this. I think that's correct. I'm going to Control C. Now I'm going to press Alt ES and T to paste the formats, right? This is the easiest way for you to fix formatting. So we can get access to the formatting window, Alt ES, and we're going to get access to the spatial window, and then we can paste whatever you want to paste. And that's basically it, I think, right? So we're correcting here. So all the numbers in here, and then I just would like to add one more thing to this exercise, okay? So if you recall from the instructions that we just read, there was nothing about depreciation, okay? Absolutely nothing in there, which is quite unusual. So based on the way the exercise was built, okay, and I edited quite a lot just to not show exactly where this is coming from, it was clear that the employer was trying to make sure the candidate really pays attention on what's in there. There's a lot of unit conversion, as we just saw in here, and there's a lot of these things for you to really pay attention and see if there's anything missing, okay? And one thing that was missing was the depreciation, right? There was absolutely nothing, and still there isn't, okay? So you need to pay attention, okay? So where is the depreciation, right? So because there was no depreciation, I just chose to have a 15 years straight line depreciation, okay? I have no clue how the depreciation is done there. Was there a standard? There's not, it doesn't matter, okay? I just chose what is easier for me. But of course, if you're applying for a place, or if you're doing a project in your own country, okay, and you know what the depreciation should be, so you just have to use the one that should be, right? So because I don't know, I just make it to be the straight line because that's the easier one for you to calculate, okay? So that's all for the input sheet. I'm gonna save now, and I'm gonna go for the next part, which is building the timeline for the financial modeling. Let's go there. Okay, let's gonna build the timeline now. So I am going to add a new sheet. I'm gonna name it project A. I'm gonna press enter. So the first thing we're gonna have, like, always leave like the first three columns as smaller, because this can serve to you to jump across your financial model, okay, or your sheet, because we're gonna have hundreds of rows, and it makes it easier for you not only to move or to go from one section to another, but also for anyone to read your model, okay? So that's the first thing. The second thing, which is very, very important, okay, and that's something that I see quite often, and in fact, there's another exercise that I'm going to be doing soon, in which I see this from another company, which I just consider a big mistake, or at least like a lack of use of good practice, okay? The timeline should always be the blueprint of your model, okay? And what does it mean? It means that, like, across every single sheet in your model, you should only have one timeline, meaning that if you have your first date of your project start in column H, every single other column in your model that has a timeline should start on column H, okay? So they should be a copy and paste, exact the same structure of the timeline should be across your model, okay? And I see quite often in like models done by companies where they do not have this structure, okay? And to me, at least to me, it's a big failure. You should be consistent in your timeline, and it should be equal across your model. And why is that, okay? Your model needs to convey information to the user, okay? Because you're going to be, let me take that back. When you look at your model, you should be able to take as much as information just by looking without reading it as much as possible. And like when you have background colors, when you have text colors, when you have titles, all these things convey information to you, and you should be able to look and already take the information. The timeline is one of them, okay? For example, here, I know whenever I see a background with this purple color, I know it's an input. And whenever I see a cell with the dotted border and no background color and something, I know it's a calculation. And I'm going to see that we also have one for information that comes from other sheets, okay? So everything should be done in a way that you can see those things and understand immediately what's being done in the model, okay? Another thing that's quite common and should always stay, like use one column for units. And these are going to come across all the models, okay? So make sure that when you start building your model, you set yourself in a way that you do it at first, or in the first time, that you don't have to redo the whole thing again. Okay, so let's gonna go for the timeline. But before I start doing the timeline, I think there are a few important pieces of information in the sheet that was given to us for this project, right? And I think the information is over here. So these are the two pieces of information I want you to look at, so that you can think the best way to structure your timeline. Okay, so it says the following: assume a 365 days per year. Okay, so you should not account for leap year, and this is important. Why this is important? Okay, because essentially what's telling you here is that you don't have to have a timeline in quarters. You don't have to have timeline in half quarters, or each period corresponds to a quarter or a half a year. Okay, each period or each column in your model should correspond to 1 year, and each year should have 365 days. And that's going to make your life much easier. Okay, not only this, that always set how you can calculate your NPV and IRR. If you recall, in Excel you have the formula NPV and IRR, but you also have the X NPV and X IRR. Okay, and whenever you have a fixed number of dates for each period, which is the case in here, you can use the NPV and IRR number or formula. Sorry. Okay, if you don't understand the difference between one and the other, I do have a video where I explain the difference and when to use one over the other. Okay, so that's why this thing was given to us here. Another thing, convention where all cash flows for each year are assumed to occur at the end of the year. Okay, that's fine. We're gonna do it. It's quite easy to do. So let's see how we're gonna go about it. I'm gonna just delete it. Okay, so the first thing I'm gonna have here a start date. Right, so I'm gonna use the columns to be the titles of each one of the row, and column A is going to be our units, right? So that's going to be a date. Just put it capitalized, date, and I'm gonna start putting the dates over here. Okay, so let me go over here, put an end date. That's gonna be a date. I'm gonna press Ctrl D all together. It's a shortcut. Sorry, let me do it again. Ctrl D, because then we copy whatever's above, so they are both dates, right? And I'm gonna have the first date over here. So what is the first date? Okay, I don't think it's in here anymore, but in the original version of the document says the project construction date is the 1st of January, and it makes sense, right? So if we're gonna have the 365 days per year, why would you pick the project construction date to be 1st of July or 1st of March? It doesn't make any sense. Okay, so even common sense tells us that the initial date should be the 1st of January. Which year? I think I deleted here too. Yeah, it's no longer here, but it said it should be 2023. So that's why we have the construction here over here. So the construction here is year 2023. So what we're gonna do here, I'm gonna go over here. I'm gonna say equals to this -1, and I'm gonna understand why I'm putting this over here. And actually, let me see. That should be. Let me do the following. It's going to be a date. I'm going to do a bit different here. It's going to be a date, right? So I'm going to put like this. The year is going to be this one here, -1. Then we're going to have the month, which is going to be 12. Then we're going to have the day, which is going to be the 31st. Okay, so there we go. Or yeah, that's good enough. So we have here the date, and I'm going to format the date. Okay, I'm going to change the format, and you will see that I always use the formatting date with the day, then the month with the letters, okay, 3 letters, and then the year. And why you should do it? Again, it's just because it's much easier for you to understand which month you're talking about. Because if you were to have these things here like this, sometimes you get really lost, right? Because you don't know if here can be the 5th of December or 12th of May. Okay, depends where you are. But when you have when you have this format here, there is no discussion. You know exactly when this is. Okay, so I think there's something wrong here. Month, oh yeah, it should be 31st here. Okay, so it's 31st of December. So here's going to be equals to the day before, right? +1, of course. And then here we're gonna have equals to end of month. Okay, it's gonna be here, and we're gonna have, now we're gonna have months in a year, minus 1. Okay, cool. Okay, so now I'm going to copy and paste the format. So Control C, Alt, E, S, T, Enter. So we have here. So we have the 1st of December 2022, 1st of December 2023. One more thing I want to fix here. Okay, usually you should not use numbers whenever, or hard code numbers when you have a formula, as we have right here. Okay, so this one here we can fix. We can set this to months. Sorry, months. How I did that? Months. Let's see. I get that right. Months in year. Okay, so we have months in year, which is 12 and 31st. I don't have a 31st named cell, so I'm gonna leave right this as it is right now. Okay, for this case, we can open exception in here. But for every single other formula, we should never ever have hard code numbers except for two numbers, number 0 and number 1. Sorry, yeah, number 0 and number 1. And we have these exceptions in here. As you can see, I'm adding 1, and we have in here where I am subtracting 1. Okay, so that's it. So basically now we can copy and paste across. Sorry, we can copy and paste this across. Let me see. I'm gonna paste these across. Let's gonna go a few. I'm gonna press now select Control Space altogether just to select everything, and now Alt OCA to increase the size of the columns. I'm gonna press now Control Page Down so to see where we go. 71, so we have 30 years. That should be enough, right? So now what we're gonna do, we're gonna go to the end, Control Right. We're gonna leave one empty column, and we're gonna select by pressing Control Space, Control Shift Right, and now we're gonna hide all these columns. Okay, Control 0. Why you want to do that? Because all the time you're going to have to select everything by pressing. I'm going to go over here. We're going to basically come over here, select Control Shift Right, and we want to stop over here. It makes your life much easier and it's faster. Okay, we're going to code faster. Okay, cool. So we have everything here. So this is going to be set as an external because we bring something from external, and we have everything in place, or we have our dates in here. Very nice. Another thing I want to do now, I want to set the periods. Okay, so I want to do the following. I want to set here as my construction period, or let's say construction flag, and here we're going to have a operations flag. Okay, so how we're going to set this, I'm going to do one more thing. I'm going to freeze my sheet over here. You can press W, F, and now you're freeze. Always do it because you're going to be able to always look at your dates. Okay, you're going to have on the right side what you are presenting, and here you're going to have, here you're going to have the calculation. Okay, and everything that goes in this section of the model should always be formulas, and the formulas for each one of the rows should be always equal. Okay, you cannot have two different formulas in the same rows for the sections for this section of the model. You will know what I mean in a few minutes. So this is a flag. Okay, so I can put a flag here. This is going to be the units column, so I'm going to select everything, and I have a unit format over here. So this should be what? This should be false because it's a flag. I want this to be false during the construction phase, which goes from year 2023, and everything else should be true, right? So how can we do it? So we're going to say equals what? If the, I have to do if the year of what? Of this cell here, I'm going to press F4 twice to properly anchor this over here, is equals to what? To the year of our construction year, which is this one here, right? Then what? Then it's going to be, this is a common, then it's going to be, let me go back here, going to be true. Otherwise, it's going to be false, right? So that's what I want. I think, yeah, everything's correct now. I'm going to copy, Control C, Control Shift Right. So you can see it doesn't go all the way up to the very last column, just go one after, and Shift Left, Enter. And let me see. So this should be, what's wrong here? So this is 2023. I'm gonna just select so you can see, this is 2023. Oh, I don't need the year here. Okay, because we already have the year there. Okay, so now it should be true, and I'm gonna copy and paste over there. Okay, very good. So we have true, and then we have false. Now I'm gonna say that this should be the opposite. So I'm gonna say not this one here. I'm gonna copy and no, it doesn't work. I'm gonna tell you why it doesn't work. So why it's not gonna work? So this is correct. So we have true and false. So whenever I have false here, I should have true here, right? So we can go, and that's okay. But there is never an end for our project, right? So we need to finish. So one thing I'm gonna do now, I'm gonna go over here. So we have this is going to be the, sorry, should be out of 3 ops operation years. And now I need to do one more thing. So let me count what? Let me see. Let me see how to properly do it. We need to put an end to our operations flag, and I need to fix this over here. Let me see how to do it. I'm gonna put over here, and we're going to see. Let me see how to do. Let me think the best way to do it. Okay, what I'm gonna do, I'm going to do a period. Okay, and there's gonna be just a number. And what I'm gonna say that this is going to be equals to what? If this year, I'm just gonna grab this one here. So basically, just want to get the year. If the year, let me go here. So if the year is this one, then I want to have what happened. If the year is equal to the construction year, then we're gonna have 0. Otherwise, it's going to be equal to this. Sorry, it's going to be equal to this one here plus 1. Okay. Yeah, there's always never closed properly. So let me see if that's correct. Right. Yeah, that's correct. Okay, cool. So, and here, because we're using this cell, I want to make visually, I want to make put a sign here that shows the use that this cell is being used. Okay, for this formula here. So we can see visually what's going on here. But okay, so I have the number of periods. That's good. And then I need to do one more thing. So, and I want to multiply this what if f, what if this number here 1 2 should be less or equals to what? Oh gosh, let me do it again. Times if what? If this number here, I'm gonna press F4 twice, should be less or equals to what? To this number. I'm gonna press F4 and enter. Yeah, I'm gonna close it, and I think then 1, otherwise 0. I think that's what's missing. Okay, doesn't let me do. Okay, so let me see how to do it. What I want to do now, I know that we should be operational for 40 years, right? So let me do for 30 years. So let me do it over here. So it is ops years, right? So that's how many years we're going to be operational for. I'm going to set this as a table. This is going to be as a cell input, and this is going to be a comma 0. Okay, so now I need to know that if, okay, so let's do like this. If what? If, let's go here. If this, press F4 twice to anchor, is less or equals to this, I'm going to press F4 3 times. Then we're going to do this. Otherwise, it's going to be false. I think now it's going to work. So this is false. Let's see. Apparently it's worked. Let's see on the transition from year 30. So this is not true. Should be true. Okay, should be the one below. Okay, it's taking a little bit of time here. Should be this one here. Now I think it's gonna be okay. So let's see. So this is true. Let's see how long more it's gonna be true. It should be true up to here. That's correct. Then we have the transition, right? So okay, that's correct. I'm gonna save the model now. Control S. So just saved. But see, it's quite difficult to see exactly where the true and false starts, right? So another good practice to do is to basically put some colors in here. I'm going to select everything to the end. Okay, now we're going to go to home. We're going to do conditional formatting, managing rules. We're going to create a new rule. Let me see. Yeah, I'm going to say if cell value is equals to true. So how we're going to set this up? Let's see. We're going to make sure that we're going to have a dark blue. We're going to have a dark blue border, and we're going to have a light background with dark. Let me see how that's gonna look like. I think that's gonna look good. So let's gonna apply. Okay, that looks good. Now we're gonna want to add one for false. So we're gonna duplicate. I'm gonna click here. So that should be false. I'm gonna format. Then we're gonna have this one being as a light dark. Going to like this. That's cool. This is going to be, it's going to be dark, right? And here I'm gonna just leave it a bit lighter so it doesn't look so much. Let me see. Okay, that's very good, I guess. Let me see. So see, now that you colored your flags, it's much easier to see when there's the transitions, and this is quite important because your model will always change. The numbers you're going to calculate will always change on the transitions. Okay, and I'm going to see that how much easier it's going to life will be when you have this type of coloring. Okay, so just by looking on here, you can see already that you have a timeline, you have some transition because we have flags coming true and false, and there's always a transition point. Okay, so here we have already our timeline. And I think now it's time for us to start building the financial model. Let's go. Okay, let's gonna continue, and now I'm just gonna do two more things. I wanna add here by pressing Control space, Control plus plus. I'm gonna select everything G and H, which are the two new columns. I'm gonna press Alt and 3 so I can clean up the formatting. So I'm gonna add these two columns here, okay? And I'm gonna see one is just because we're gonna need it. But the other one, and I'm going to just increase a bit more here, is because I want to paste in here for you guys the formula to text. So you can see what is in each one of the rows, the formulas that are in each one of the rows, okay? So it doesn't really matter that you don't see much to the right, but at least you're going to be able to see the formulas that I'm using in each one of the rows, because it's going to make your life a bit easier, right? So I'm going to do for this one here, I'm just gonna copy and paste on this sheet here, and you can see. Very good. And another thing, I have done, of course, the exercise already, and I'm gonna just copy and paste some of the structure so I don't have to do it, because otherwise it's gonna take too much time for this video. One thing I want to do though, I just want to add one row here. I press Shift space to select the row, Control plus to add another row, Alt 3 to clean up the format, and here I'm gonna just add a call up, and I'm gonna set this as H2, okay, because that's what it is. Next, I'm gonna just copy here. I'm gonna say we're gonna have the generation calculation. I'm gonna also set this to H2. There we go. I'm gonna copy whatever I have here. Then it's copy. Now let's gonna do it. I think it's gonna be faster. Total generation. Okay, so that's going to be megawatt hour. Sorry, let's gonna make it correctly. Mega hour, and that's what we have. And then we have to bring the generation for project A. I think we have this as a named cell, so we do have it. So I'm gonna press tab, Alt 2. We're gonna set this as a comma 0, and we also have to set it as an external number. Okay, so you have to put a table here, so which is this cell here, because it's megawatt hour per year, right? So I'm gonna Alt OCH, just to make it a bit bigger. So always, again, that's something that you always have to keep in mind. Okay, the units, whenever you have a sheet that has a timeline, the units that we set in this column will always refer to the calculations that happens in this section of the model. Okay, not on what you're bringing from other parts of the model or what you're calculating. And to reflect the unit of the information you're bringing, in this case here, the megawatt per year, what you're gonna do, we're gonna set a table with the unit above it. Okay, so then it's clear for the user that you're bringing something from another place that represents the megawatt per year, but then whatever number you're calculating here is going to be the megawatt hour, right? So that's the standard way to do it, or the best practice to do it. So that's the total generation. What do we have to do? We have the gradation, right? So I think let's see, we don't have the degradation here, so we're going to have the degradation, and then we're going to have the net generation, right? So degradation is going to be a percent in this case here, right? And then we're going to have the megawatt hour here. Okay, so I'm going to also add a column here. I'm going to clean it by pressing Alt 3. Another thing I like to do, I like to get rid of the grid lines. So you come to view and click on grid lines, right? So I don't like to have those, and that's it. So we're going to have here the generation, right? Then we have to calculate the degradation, and then we're going to have the net generation. Okay, so what is the degradation? I think I have over here, the degradation is going to be what? It's going to be 0.75% per year, and it starts from year 2, right? Because basically the idea here is that like the first year we're going to have the full generation, there's no degradation, and after that we're going to have the degradation of 2%, 0.75% per year. I am going to set these as degradation only, degradation, okay? And I will get rid of this one here. We don't need, because we're going to assume it is the same for both projects, okay? So you can delete this, and if you want to be very specific about what you're doing, you can add a comment here, and you can say, I can go here, add a note, and you can say, assuming degradation is the same for both projects, period. Okay, so you can add those notes here. So I don't like to use them, okay? What I usually do when I'm working a project, I have an assumption book, okay? And in the assumption book, I set all these things, because when you're looking to the Excel file and you troubleshoot in it, okay, let's say you receive an Excel file, a financial model from an Excel file, you're going to see that this is the degradation used for both projects, right? So I don't need to add the note here, but because this is an interview process, it might make more sense. Another thing you can do now is basically bring this thing over here above, right? Say degradation, and we just delete it, okay? And then we can add another row and clean it, okay? So then it's clear that what you're doing. And now we have degradation. So let me go here to projects. I'm going to say equals to degradation, press tab. We have to format, so it's going to be an external sheet, and it's going to be a percent, right? So we're bringing an information from another sheet, so that's why it's in here. And this is going to be I'm going to copy this. It's going to be a percent per annum, right? Now I have to calculate the net generation. So let's see how we're going to go about it, right? So first, what's going to be our total generation? Total generation is going to be equals to this number. Okay, I'm going to press F4 3 times to properly anchor the cells. Okay, so that's how you usually go. You're going to always, whenever you anchor to the left, we're going to press F4 3 times. And whenever you're anchoring above, you're going to press 2 times. That's what I'm going to do now, because I want to multiply this number here by the flag. I'm going to press twice, and there we go. I'm going to Control C, Control Shift right, Shift left, Enter. And then we're going to have all the numbers in here. And because I properly anchored everything, I have the correct answers. Another thing that is always good to have is have the sum just to the first column to the left of your timeline. So we're going to sum everything, and because this is a sum, I also have a cell formatting. Okay, so that's the way we're going to do. Now we have to calculate the degradation. Let's gonna think how to do it, right? So basically what we should have, I'm gonna call this a degradation multiplier, and here I'm gonna have an X. Why so? Because here our multiplier is gonna be 1, right? Here what's going to be? It's going to be 1 minus, it's gonna be this number here times 1 minus this number over here. Okay, so that's what it's going to be, right? So then we keep moving on, right? So we essentially already have the formula. I just want to set this as a multiplier. So the way I'm going to do, I'm going to set this as a comma, and then I like to have at least four numbers after the period. Okay, so that's the way you do. But we have to have a formula here, right? And here should be 1 or 0. It doesn't really matter. Okay, so how are we gonna do it? So what we're gonna do, we're gonna say if this 1 2 we have to anchor properly, is equal or less than 1, then it's going to be 1. Otherwise, it's going to be equal to the previous times 1 minus this number here. I'm going to press F4 3 times. I'm going to close it. Enter. Let me see if I did it correctly. Yes, apparently so. So I'm going to copy and paste. So that's 1. That's okay. And because we're using this cell, we have to also properly format it. So that's going to be an empty. Okay, good. So that's okay. And I'm going to copy and paste across. So we have our multiplier. I think another thing we can do, we can multiply by this number. Let me press twice. And there we go. So then the only thing we have only numbers whenever we have the operations phase. So that's better practice because it's visually, it is easier for you to understand. You see, you can easily identify where the transitions are. Okay, so that's another thing I like to do. Sometimes it's not possible, it takes too much time. Okay, we're gonna have to have such a huge formula here that you don't benefit from it. Okay, because throughout the model, you're gonna see this transition. So you don't need to have it in every single row. Okay, so that's one thing to keep in mind. Another thing, always have small formulas. Never ever have lines and lines of formula to calculate one row. Okay, this is not best practice. The best practice in financial modeling is to use as many rows as possible to make as easier as possible for someone else to troubleshoot in your model. Okay, that's the best practice. So whenever you see a formula, it should be very easy for you to understand what's being calculated, right? So that's another thing to do. So now I'm just gonna copy here. I'm gonna paste over here and paste over here. So we have the formulas. That's fine. And now we can calculate the net generation. So I'm gonna copy this. I'm gonna paste over here, and this is gonna be equals to what? Equals to this times this number. I'm not gonna anchor this. I'm gonna leave as it is. That's okay. I'm gonna copy and paste across, and that's it. And because this is sort of multiplication, I think I have a line balance here. That's fine. So we know we are adding or multiplying stuff in the generation. You can also highlight, okay, make it bold. I have mixed feelings about this. Sometimes I think too many bold things, it doesn't help, but you can choose however you want it. Okay, now we have the net generation. What we are going to do, we are going to calculate the revenue. I'm going to Control C, Alt ES T. So we have the revenue here. So let me see how we're gonna deal with the revenue, right? So we're gonna have first, we're gonna have the, let me see, we're gonna have the escalation, right? So it's gonna be a multiplier. So escalation multiplier. Then we're gonna have what? No, I think we're gonna have to do one thing before. We're gonna have the escalation flag, because it should flag when we are escalating this, I guess. Let's see. Let's gonna go. Then we're gonna have our revenue calculation. Okay. So if it's gonna be a flag, this is gonna be an X. This is gonna be a revenue, which is millions. Here we go. It should be this one here. Alt EST. Okay. Alt ESV. Sorry. Now should be Control C, Alt EST. Okay, that's correct. Now I'm gonna increase this row. I'm gonna select Control Space. Now I press 1 by 1 Alt OCA, and there we go. So it's bigger. I'm gonna just make this one smaller so we can see more things of the calculations. Okay, so let's see the revenue. We go, let me see, escalation multiplier. So we have a escalation for the revenue, which is 2%. There we go. Right, so this is the 2% that we're looking for. I'm gonna just properly format it. So this should be percent per year. Okay, so that should be over here. Now we're gonna calculate the multiplier, which will be what? Maybe I can copy this multiplier over here. Let me see. Everything is properly anchored. Let me see if that's gonna work. So we have one. Okay, this should be a plus now. So because we are adding, right? So here I just have to go here, select and change to plus, enter. Let me copy and paste. So we have one. Yeah. So the way I check it to make sure it's correct, I just do this divided by this, and it should be 2%. Okay, so that should be okay. I'm gonna select, paste everything, and there we go. So I think this is correct. So basically what we have to do now, Control X, I can put this over here. and we can get rid of this. Let me see, that's correct. So let me do one more thing here. I'm gonna Control X here, and I'm gonna select Control minus, and I'm gonna live like this. Okay, cool. So we do have our escalation. So it's a revenue escalation multiplier, Then what's our revenue? I'm gonna just add one more. We have our price. So it's not a PPA, let's gonna just pay price, right? Which is going to be in THB per kilowatt hour, I guess. I'm not sure. Let's see, revenue per kilowatt hour. Yes, that's what it is. Auto CH, why is this so big? Okay, so it should be a comma 0. Okay, so it's 4. It should be comma like this. Okay, it's 4. Okay, so it's 4 per kilowatt hour. So what's going to be, we can calculate here now. It's going to be equals to this times this, 1, 2, 3. But that's going to live like this. Copy and paste. So we have the price per kilowatt for each one of the years. And now we just have to multiply what? We have to get our net generation times our price. And we need to divide or multiply our price by 1,000, right? Because we have kilowatt and we need to multiply by megawatt. So it's going to be times 1,000, which we already have an image cell. And I'm going to copy and paste. Let me see if that's correct. I'm going to just format this as a comma 0. And I am just doing copy and paste here. I think there's something wrong with the revenue. It should be on the units, right? So we have per kilowatt, the price per megawatt. I have megawatts here. Okay, but now you have to have millions, right? So that's the thing. So we have, here's the tie, so we have to have millions. So here I have to divide by 1,000 actually to make the correct. Okay, I think that's correct. Let me just double check here on my other exercise. It's 2%, it's 4. Okay, let me see. I think there's something wrong. Let me see. No, that's everything correct. So I just want to set these as an external, and we have the correct revenue here for each one of the years. The only thing I want to do now, I want to select by pressing Ctrl Shift right. Then, sorry, I did something wrong. Then let's cancel this. Alt 2, and then I want to set these as line balance because we make some calculations, and that's exactly what we have. And it's always good practice to check the transitions, right? So you can press Alt page down, sorry, to go faster to the transitions. So there we go, and then we can see if the formula is properly calculated. So that's always a good practice to do. Very nice. Let me save here now. And because we already have the revenues, we can go to the next one, which is the operating costs or costs. So let's set these as H2. And what we're going to have. So here we're going to have a few categories, right? So we have personnel costs. I'm going to set these as heading number 3. And here, basically, we're going to have the personnel costs. Then we're going to have personnel multiplier. Then we're going to have the final. Let's going to put personnel costs here, right? So that's okay. Then we're going to have, basically, we're going to have this. Control V, and here it's going to have an X. Okay. I also want to copy this structure because it's going to be pretty similar in terms of formatting. Okay, and I think you can also have the personnel costs over here. Fair enough. So let's gonna see what is the personnel cost, right? So it's gonna be, let me see if we have personnel costs. Yes, we do. So that's 8 million per year, right? Gonna be THB mil per year. So that's too long. Okay, so let's gonna just put per year. Let's gonna just per year. Okay, so we know it's going to be 8 million per year. Okay, so maybe you can do like this, mil per year. Okay, that's good. Then we are gonna just basically, let's see if we can calculate here. No, what's wrong? are just should be F. God, I know it's much easier to like this. So if it's going to be this, press F4 3 times this one here. I'm going to press F4 twice, enter, Control C, Control V, and there we go. One thing I forgot to add is just to copy the formulas. So we're going to have over here, then over here, and I'm going to already have those ones over here. Nice. We can delete this for now. Cool. So we have the cost. Then we have to bring the multiplier. I'm going to add one row. I'm going to clean. I'm going to just copy this structure here. What is the multiplier? So it's going to be equals to personnel. Where is it? Personnel costs. It's going to be an escalation of 3%, right? Which is above the 2% inflation. So we have discussed that in the past. So I'm going to press 3%, and I think I can copy this over here. Let's see. Looks okay. I'm going to copy and paste across. But we have to increase. Yeah, so here should be a plus. Copy and paste. And yes, we are increasing by 3%. And I always divide to make sure that's correct. Okay, so there we go. Here we can basically, I think we can use this one here to copy. So if everything is correct, oops, sorry, Control Z. I should paste here. Yes, that's correct. And now I can copy and paste across. And here we go, right? So we do have the costs that we're looking for. So I'm going to get comma 0. Now I want to do the same here. And there's an easier way now to do, because that was the last command I use. If I press F4, you will see that I set up again this as it should be. And we are escalating. However, this is 8 million per year, and that should be basically it. Okay, yeah, that's correct. Cool. So what I'm going to do now, I'm going to basically copy this. I'm going to paste over here. And what we're going to do, this is going to be the next one is maintenance cost. So it's going to be maintenance cost, right? So I'm going to F2, Control A, I'm going to enter, Control A, Control V. Here's going to be Control C, Control V. I can also copy here and just write multiplier, right? So I think we have everything. So maintenance cost is going to be, I think we have maintenance cost for each one of the projects as we do, and we have a named cell. Okay, so that's 15. And if everything is correct, we did, should be okay, but it's not escalating. Okay, I have to have an escalation of how much? That's the inflation, right? That should be the inflation, which is 2%. Okay, now we have our escalation costs. One thing very, very important that I forgot, right? And you should pay attention. I mean, it's quite easy to catch, but it might be a bit late. Again, but it's not too much work to redo it. In financial model, we have to have some sort of standard to consider what should be a positive number and what should be a negative number. The way I choose to do it, it's whenever is a cash flow to the project, I use it as a positive. So we're going to also always have revenue as positive. And whenever we have a cash outflow from the project, it's going to be a negative cost, right? It's going to be a negative number. So because costs represent a negative number, I want these numbers here to be negative, okay? You can keep working with positive numbers and then make sure just add in or subtract those things correctly. But I like to have positive and negative as I just described to you. And whenever I want to translate something that I'm calculate into a negative number, the way I do, I always multiply minus 1 as it is in here in the end of the formula, because then it's clear when I have to troubleshoot the model that I did that on purpose, okay? So that's the way I like to do it. So I'm going to copy and paste. So everything here is already negative, and now I'm going to do over here, multiply by negative 1. I'm going to copy and paste, and there we go. Okay, so that's the reason why, that's the way I like to do, because it gets easier to understand why I'm doing it. If I come here to troubleshoot the model, I know that I on purpose I multiplied it by negative 1. There's no mistake. I did it because of the convention that cash to the project is positive number, cash out of the project is a negative number. Okay, There we go. So we have the operating costs. Let me just drink some tea. Okay, now we're gonna go, I'm gonna copy this again. I'm gonna paste over here. And what we're gonna calculate now, it's going to be the land costs. So it's going to be land costs. Land cost. Okay, and yeah, so I can up to Control A, Control C, Control V, Control C, Control V, and Control V. But here's land cost, land cost multiplier. Let me see, multiplier. Maintenance costs. Yeah, that's okay. Cool. So land costs for project A. Let's see. I think we have the same cost, right? So let's see where that is. Oh, we have here. Is it named? No, it's not named. So let me do it, and you're gonna understand why. So I'm gonna press Control open bracket to go back here. I'm gonna name here as land cost project A. I'm gonna Control A, Control C, enter, enter, Alt F3, Control V, B, enter, enter, Alt F3, Control V, A, B, enter. Okay, so I very quickly named all the cells, as you can see on the left upper corner, right? So A, B, and C, right? So I'm gonna go back here and I'm gonna reference and make sure you do it. Okay, so it's gonna be equals to the land, sorry, let's go again, equals to the land project A. Okay, make sure you're gonna understand why this is important. It's gonna make your life much, much easier. So what is the escalation? I think that's also 2%. That wasn't mentioned. I think, yeah, it should be 2%. That was mentioned already. And that was 2%, right? So actually, no. For the land costs, it was much more. Well, here we go. It was 5% increase. So we're gonna go. Do we have this information? Where do we have that? I don't think we do. It's here. We do have. Okay. So I'm gonna, because it's the same escalation for both projects and doesn't change for the combination of them, I'm gonna leave like this. Okay, so we do have our land cost calculation here. Very good. Let's gonna keep going on. Okay, so that's correct. So I'm gonna scroll down. We're gonna continue on our cost calculation. So now we have the miscellaneous. So I'm gonna copy. I'm going to paste. It's going to be miscellaneous. So I never know how to write it, but let's see if it gets it correct. Miscellaneous might be miscellaneous costs, right? Control C, Control Enter. I'm gonna Control V here. I am also going to Control V over here and over here. Okay, so what is our miscellaneous cost? Let's see. It's gonna be equals to, okay, so we have the same cost for both projects. That's very good. Okay, I'm gonna say equals to here. That's okay, and that should be the inflation rate, right? So I don't expect this should be equals to the inflation here. Okay, very good. So I just want to do one more thing. I am going to add. I am going to Control D, Control D, Control D. This is going to be project A, sorry, project A. This is going to be project B, and I'm gonna name it. It's going to be miscellaneous cost project A. I'm gonna Alt F3, Control V, enter, and again Alt F3, Control V, A, B, enter. Okay, so that's going to be here. It's going to be equals miscellaneous. Again, trust me, it's gonna make your life easier, and you're gonna just paste there. This is very, very, very fine. Then we're gonna have our community fee. I just want to know if we have to escalate the community fee. I am not really sure. Okay, let me go here because I just did it wrong. So I'm gonna just paste over here. Let's gonna see if there is anything related to the community fee. Okay, where is it? The community fee 2, 3 should be here. Okay. to foster good relationship, the company has committed to donate 25%, 0 to 25. Okay, first thing, this number is very high, right? So we're charging 4 TAI per kilowatt hour, but we're giving them 25 cents of TAI per kilowatt hour. It is incredibly high. It's like almost 10%, 8%, something like this, going to be as community fee. It is too much, okay? So there's no information about escalation here. So we're gonna assume that for this particular cost, there is no escalation, okay? So we're gonna say here community fee. I'm gonna Control C, Control V, Control V. I'm going to come over here, Control V space, and I'm gonna Control V over here, okay? So we're gonna assume there is nothing here. So we're gonna leave it empty, okay? Actually, I am even going to delete it. So what we're gonna do, we're gonna delete it, and now we have the community fee is going to be what? It's gonna be a TAI per kilowatt hour, correct? And that's going to be equals to this 0. whatever 25 over here. Okay. Now we have to get this number and multiply by the generation, right? So our generation is over here. I'm gonna press F4, sorry, F4 twice, enter. So that's the formula, and I will just copy and paste across. Let's see. Does it look all right? And I have to divide by 1,000 also, right? So I'm gonna go over here. I have to divide by 1,000, and I think now should be okay. What's wrong here? I multiplied, right? Yes, that's not. This is what I need. Okay, I think now this is correct. Okay, cool. Another way to do it, instead of dividing by 1,000 here, you can simply multiply by 1,000 here, because then you have this cost is going to be per megawatt, and I think that's easier to understand. Let me just increase this a little bit. We're going to reduce here, and now it makes your life easier, so you can just copy and paste, and there we go. Right, so what's wrong now? What is wrong here? Should not be wrong, comma 0. No. Okay, let's see. 1,000 because I had kilowatts per megawatt. What's wrong here? Let me. No, I see. Here should be. Let me go back. That's wrong. Of course, that's wrong. It should be per kilowatt. I should have divided by. We are paying here 0.25 per kilowatt hour. Okay, but that's the thing, is the million again, right? So let me go back here. This is million, right? So that's why I get confused. So how now here we have to divide by million. So here we go. Sorry, should be mil. Okay, so, but I'm gonna do this over here. You see, so I even though I already did this exercise, I'm really doing it on my own, so you can see how I go. It's divided. How I go about it, right? So that's exactly how I do every single financial model. I can look around and see things, but at the end of the day, there are things I have to do and repeat on your own, and sometimes you get it wrong, right? But it doesn't make sense. And that's what you have to do when you're doing your financial modeling. You need already to judge if the information you're providing, the formulas you're building, makes sense, right? And it was clearly wrong to me. Straight away it was wrong, okay? So that's the first thing. Then you can see how much you're paying in fees for the entire of the project, okay? It's a lot. It's almost as much as your land costs, right? And it's more than your personnel, almost 4 times more than the personnel. So it's quite a lot of money that you're paying for community fee. I think that's too much, okay? I think you can reduce this number by half or even more in real projects. Okay, there's one more thing you need to consider, which is the retirement costs, right? So let's go back to the information we were given, and there is information on the retirement cost. Let's see where it is. It's not in here. This is the plant will be decommissioned. Here we go. And scrapped at the end of its 30-year lifespan at the net cost of 5% of the original cost. And we did calculate that over we did make the calculations over here, right? So we have these costs already. We just have to escalate, right? So we have to get escalation. So let's gonna say this is the scrap escalation. Okay, so let's see. So I'm gonna just set this as a H3. I'm gonna control D here, but we have to set this as normal. And we also need to, so this is retirement cost escalation. Sorry, I think we can do exactly as we were doing over here, right? So we have the escalation, then we're gonna have the multiplier. Control C, Control C, escalation, retirement cost multiplier. There we go. So we can copy this structure, all the structure, one more, and I can basically paste it here. I think it is correct. So what is the retirement cost? It's going to be retirement. Do we have No, we don't have that. Let's see, because that's quite important too. Yes, we don't have. So let's going to give names here. So retirement cost project A, Control A, Control C, enter, enter, Alt F3, Control V. This is going to be B, enter, enter, Alt 3, Control V, AB, right? So now we have the costs. Okay, so go over here. I'm going to say equals to the retirement cost project A. All right, okay, but then we have to have a different formula here. But this is going to be, what is the escalation rate for this? Is going to be 5%. Wow, okay, so it's going to be equals to scrap escalation. There we go. So I think for this we can copy and paste, right? That's okay. The only thing though is that we are going to have to incur this cost here on the last year of the project, right? So what we're going to have to do, we're going to have to change the formula. Is going to say equals if what? If we have the periods here, this, I'm going to properly anchor here, is equals to the construction year, which is the year number 30. Then we're going to have this cost. I'm going to press F4 3 times, multiply by -1, comma, otherwise it's going to be 0, close, and there we go. Let me copy and paste. Okay, something is not really, it's not really working. Why? So let me see what's in here. What is this? Oh, okay, construction year. So this is not construction year. This is the operation. Should be the ops here, right? So there we go. Copy and paste. Now it should be okay. Okay, 133. Okay, so this is when we're gonna pay. I'm gonna press Alt page down. I'm gonna press Alt page down to see if that's in the correct place. It is, right? So we picked up here, and that's in fact going to be multiplied by 4 and return it 450,000 million Thai as a scrap value. Okay, I just want to do one thing here. That should be it, right? Is it 5%? The scrap value? Yes, the retirement value. Did I copy this number correct? Let's see. Yes, 5. The net cost. Oh, the net cost is 5%, right? But not the okay, they adjusted inflation. Okay, so that should be wrong, right? So this is not the scrap value. So how we can scrap? I even wrote it wrong. So let's gonna delete this. The only way to delete the name, you have to come here, formula, name manager, and you gotta find it, and I will just delete it. So we don't need it, right? So we're gonna have a mistake here now, but here we can fix. This can be inflation equals to the inflation. Okay, now everything's correct. The number makes much more sense now, right? So we have 237 million Thai as retirement costs. Very good. So now I think we calculated every single cost, right? So retirement costs, community fee, miscellaneous land costs, and maintenance and personnel. So we have all of them in there. Now we can just add here the total operating costs. I can copy this structure. I'm gonna paste over here. Now we're gonna just add all those things together. It's gonna be equal to the sum of what? Of the personnel, comma, maintenance, comma, land, comma, miscellaneous, comma, retirement, comma, sorry, these retirements here, right? So 1, 2, 3, 4, 5. I guess this is correct. We're going to copy and paste everything across. And we have a total of 3 million or 3 billion, right? I just want to make sure that this is correct. I forgot one, the community fee, right? I knew there's 6, right? So the community fee, I just want to make everything in order. So it's going to be this, now comma this, and I'll close, and I'll copy and paste, right? So there we go. We have the 4 billion Thai as total operating costs, and I'm gonna highlight this one, right? Because we have the operating costs, and then I'm gonna also highlight here the revenue, because that's the difference we want. Oh gosh, what's going on here? That's the difference we want to calculate. So we have the revenue and we have the cost. So I also can add, I can clean. So we have exactly what we're doing here. And there we go. Cool. So let's gonna move on now and really start doing the cash flow to calculate how much cash is available to the project. And then we're gonna come up with the IRR of the project. Okay, so let's go. So what are we gonna have here? So basically what we're gonna come up with now is the cash flow. So need to understand what is the capex, how are we funding the project, then what is the revenue minus the operation cost, and then we're gonna have to account for our tax payment, debt payment. We have some working capital to take care of, and then of course later on we're gonna have the cash flow available for distribution. That's basically how we're gonna do it. So let me gonna go over here. I think we have things over here. What I'm gonna do now, I'm gonna get investment. Just notice now that I set investment on column B, okay? And I'm going to get these as, let's gonna put heading 1, and that's okay. And then what we're gonna calculate first. So first we are gonna calculate the capex. So we're gonna say here, what is the investment? Okay, so it's gonna be a heading 2. There we go. Then we're gonna have the total capex, right? So that's going to be in million Thai. And we have the capex. So the capex, the total capex for project A, it is a named cell. So we have this, and we can just set as an external and comma 0. There we go. So when do we disburse the capex? So I'm just gonna copy the structure so we can paste it here, pressing enter. So it's going to be equals if what? If, actually it's much easier. It's going to be equals this, right? I'm gonna press F4 3 times, and then I'm gonna multiply by the flag, by the construction flag. I'm gonna press F4 twice, and there we go. So I'm gonna copy and paste, and I'm gonna also save this as comma 0. Very nice. So we have here, so the assumption is that we're gonna disburse the capex evenly throughout the construction. That's the assumption. So it's basically we're doing an overnight model, what I call overnight model, and that's the capex. So question, is it money coming or cash coming to the project, or cash going out of the project? So the capex itself is cash going away from the project. So we're going to multiply by -1, right? And I'm going to copy, and I'm going to paste the formula over here. Okay, so that should be a negative number because the capex is going out of the project. But the next one then, it's going to be, I'm going to copy the structure. The funding, that's a positive number, right? Because we're going to fund the project. So investors and banks bringing money to the project. So we're going to have this as a positive number. So we're going to have the equity, and then we're going to have the debt, right? So that's what we're going to have. And I think we have already calculated those numbers. Let me see. So we have 50%, that's the debt ratio, but we don't have the cost for the project, right? So let's go to see. I'm going to go over here. Let me go back here. I'm going to name this for debt ratio. It's going to be the debt ratio, right? So what are we going to have? So the debt ratio, I'm going to delete, and there we go. So the debt ratio, let me Control D here. That's going to be equal to what? The total capex, right? I'm gonna press F4 times 1 or times the debt ratio, right? That's what it is. And this one here, the equity, is going to be the difference, right? It can be equals this minus this, but I like to do a different way. I like to say that this is going to be equals to this times 1 minus the debt ratio, because it's the inverse, right? So that's what we have. The number is the same. Okay, and that should be a positive number because that's cash coming to the project. So I'm going to Control D, and let me see if everything is correct. It looks like it's correct, so I'm going to copy and paste, and I'm going to over here. Okay, I'm going to just change now for the sake of the exercise. I'm going to change to 60%. So I just want to see if this is correct, right? So we have more debt than equity, and if we go to do this divide by this, we should have the 60%, right? So that's correct. Okay, cool. So I'm going to return to 50% over here. That's very nice. So this is basically telling us that we have a total capex of 2.6 or billion Thai, and half and half is going to be equity, half is going to be debt. And what I'm going to do now, I'm going to copy. I'm going to also paste over here. I'm going to say that the total, and we're going to have Control D. We don't need here. We can do this, and this is going to be equals to this. And copy and paste. And whenever we have just the sum, I just like to do a Alt H B, and then I'm going to have the P, which is the top border. So I press P, and there we go. We have a top border here. Okay, so there is this difference between this and this. This is just adding. There's some sort of multiplication or calculation involved to get to a total cost. Okay, and that's a good point too. So basically here I can have a total. So let me just change everything. I want to just have a total here because that makes it clear of what we are calculating, right? So here's going to be the total. This is going to be total. And this is going to be total too. Don't know, sorry, Control Z, this is going to be total, sorry, total. Right, so do we have more? We do have more. We have total personal costs. Okay, so there we go. So that's fine. So I'm going to press Control S to save, and we already have our investment calculations. Cool. So I'm going to copy this. I'm going to paste over here now, and this is going to be the cash flow. Okay, so how we are going to go about it? So first thing we need to do, we're going to do a cash flow waterfall. I can even have a cash flow waterfall here. Waterfall. Okay, basically we're going to calculate the flow of cash, right? So first we're going to have what the capex, the funding, the capex and the funding. Then we are going to have the revenue minus the opex. Based on this, we're going to calculate the tax paid. Then we're going to pay our debt. We have to account for our working capital adjustments too. And then when we do all this calculation, we're going to have the cash flow available for distribution. Okay. Usually that can be also said the cash flow available for equity or to equity, but we're going to distinguish now because there is a caveat in the exercise where we have to understand how to calculate the cash flow to equity. So let's gonna start doing this right now. So what I'm gonna do now, I'm gonna have here the operating activities, right? And that's going to be, let me set these as a heading 2. So that's going to be basically revenue. Then we're gonna have the operating costs. Then we're going to have the earnings before interest, tax, depreciation, and amortization, or the EBITDA. And I'm going to have here the working capital, right? So now I'm going to copy this. Sorry. So let me go up a bit more. I'm just going to copy and paste, right? So what is our revenue? So basically I can get this structure because that's what I need. I copy and paste. So also pay attention how I try to optimize the time by copy and paste things across, right? To avoid formatting, for instance, right? So, and using the same structure. Remember here when we were doing the costs, I was always copy and paste the whole structure because it's always the same. You're basically copy and paste and changing values. So it's very easy for you to increase the speed of your coding, not your coding, but your financial modeling construction, okay? And that's something that's very valuable, okay? Because in the real job, you're gonna have to do as fast as possible because there's not much time and you have to always be changing stuff, okay? So the faster you are, the better analyst, so the better modeler you're going to be, right? So the revenue, we can say equals to revenue, which is over here. I'm gonna press enter, then you're gonna have the operating cost, which is over here, and here just have the sum. I copy and paste and I go across here. Okay, yeah, there's one thing here that we have to get rid of this bar. So Alt H B any, so get rid, and then Alt H B P, right? So okay, so then I fixed it and everything seems to be correct now. So that's our EBITDA. We are gonna keep moving on. So we have the operating activities for the working capital. We're gonna leave this here right now. Okay, so we're gonna calculate this later. I am going to just set this with yellow color because that's gonna indicate to us we have to fix it. I'm not gonna calculate this right now. We're gonna calculate this a bit later. Then what we're gonna have, we will have to calculate the cash flow available for that service. Okay, this is a metric that's very much used for project finance. We are not told whether we're going to do project finance here or not. That's something that is a little bit up in the air. But because I wanna be concise on the model now, because we have 3 projects and we assume we're going to be constrained in time to build this thing. So I'm going to build everything in one sheet, okay? But usually I break these things down in several sheets. So I'm going to have the construction, then I'm going to have the operations, then I'm going to have the debt sheet, then I'm going to have the equity sheet, then I'm going to have the depreciation sheet. But here I'm doing everything at once, okay? And because of this, I'm just going to assume now it's going to be some sort of cash flow waterfall, okay? If this is a corporate finance, you don't need to do this way, but I think it's easier to understand how to do the cash flow or to calculate these things in this way, and then you build up the 3 statements as it was requested. Okay, so that's the reason why I'm kind of doing a waterfall here. Okay, so let's gonna copy. I just want to copy what I want to copy. This one here, I'm gonna paste it here, and this is going to be equals to this number plus the working capital. Okay, so I'm going to copy and paste, so we have this in place, but we're still missing these numbers here. Very nice. Okay, so we have the cash flow available. There is a typo here. Available here. Cool. Then we will be able to serve our debt, right? So this is going to be our debt. Here we're going to have the principal, repayment, and interest payment, or yeah, that's gonna be payment, not repayment but payment. Okay, so there we go. I'm gonna also copy the structure, and I'm also gonna leave this as empty because we're gonna calculate these things a little bit later. So why I'm doing this, right? So because these are supporting calculations for the cash flow waterfall, and in order to have a logical flow of your calculations, everything that is supporting calculation, I'm going to put it below. Okay, the goal of my cash flow waterfall is to calculate how much cash is available for dividends or equity. In this case, we're splitting these things, right? So for dividends here, and because I need this information here and it takes a few rows to calculate it, I'm just gonna throw everything below because I want to be easy or very easy for the reader of the model, the structure, right? So it has to flow it. So I have the cash flow and then I have the numbers. So everything that's supporting the main calculations goes below, okay? So that's why we're leaving like this. So we have the debt. We're gonna do this later. I'm gonna have a total here. I'm gonna also copy this total, and I'm gonna copy this structure here because that's what I need. And enter. I'm just gonna check so everything is correct. And I'm gonna Alt ES T, Alt T. No, I don't think that's correct. So let me do it again. Okay, Alt ES formulas and Alt ES T. Let me see if that's correct. Okay, that's good. Okay, good enough. Cool. So we have this, and we're gonna put these numbers here later. Then we're gonna have the equity returns, so cash flow. Now that so we have our EBITDA, we know how much funding we need, we know the working capital requirements, we know the debt. Now we can come up with the let me just think a little bit, the equity returns. Okay, or let's gonna call equity returns for now. I'm just thinking because there's the dividends and there's the equity, right? So but that's gonna call equity returns, and we can change this later on. Alt 2, I'm gonna say here. Okay, so what are we going to have? We're gonna first have, once you calculate all those things here, this row here is gonna represent how much cash is available for dividends. So I'm gonna just go over here. So cash flow available for dividends, right? And we're gonna have to change this later. I'm gonna just copy this structure. One more thing to make your life easier. Let me just copy this. I'm gonna paste over here. Now I just want to copy this structure and paste over here. That's good. So we're gonna delete this for now. So the cash flow available for dividends is gonna be basically equals to, it's gonna be basically equals to the sum. It's gonna be equals to the sum of what? Of our capex, comma, funding, comma, EBITDA, comma, sorry, not EBITDA, this one here, comma, this one here. Let me see if that's correct. I'm gonna close it. Let's see what's wrong. Okay, there's 2 commas here. Let me see. So we have this and this. That's fine. So this is over here. This is the difference already. So I'm already calculated. So that's correct, right? So this is this, and I can this. Okay. So basically, I can copy. I can have this one here. I can copy here, and this can be equals to this one here. I think it's a bit easier to read. So we have this. Okay, changed everything because I didn't anchor properly, right? So let me redo it. So we have what now? Let me do this again. It's going to be equal to the sum of what? Of our capex, comma, funding, comma, cash flow available for that service, comma, the debt repayment, right? So that's what it is. Let me do a bit better even, huh? So this one here also should also include, that's why I was getting a bit confused, should be this plus this. Okay, here I'm using the plus. Okay, so we have those things here, right? That's okay. Okay, now I have this, and basically here is going to be equals to this plus this. I think now it makes more sense. So that's good. Okay, cool. So this is the cash flow available for dividends. Okay, and it's going to be the same numbers, right? So there we go. So we have this much. There is a mistake here. Should have nothing there. There we go. Okay, so this is the cash flow available for the dividends. We're going to have to do some calculations here later on. We're going to leave this as it is right now. We're going to assume that what we have here's the cash flow available for equity, okay? Or to equity. We're going to assume this for now. We're going to have to make changes because of this part of the exercise here, okay? So you see returned earnings, net income. So we're going to touch on these things later on. So we have to take care of this, okay? But for now, let's call what that is. And yeah, let's going to leave just like it is. Okay, so what else we have to do here? I have to do one more thing that I forgot. We have to pay taxes, and that's going to go over, that goes over here. So we're going to have our Control C, we're going to tax paid. So tax paid. Okay, so we're gonna do this later too, and that will have to come over here. So we have to add here and a plus. Okay, so that's gonna redo and make sure that we got everything in place, right? So we have our revenues, right? So this is what we have. Then we get our EBITDA. The first thing you have to pay the cash. Everything's about cash now, and there's nothing on the net income. Then we have to pay our tax. We're gonna have to calculate the working capital. This is gonna be, when you add all these things together, we have the cash flow available to serve our debt. We pay our debt, and in principle, there's nothing else that it needs to be paid for. That's going to be the cash flow available for dividends, right? So that's what we're gonna have here. So now we can calculate then the cash flow to equity. So this is the available one. We need the cash flow to equity because why? Why is this? Because we have to add the equity that was given to the project, right? So this is an outflow to the investor. So here we're going to calculate everything from the equity investor. Okay, so that's why. So let's see the cash flow to equity investor. Okay, it's going to be equals to what? I'm going to copy, I'm going to paste here. It's going to be equals to this number here multiplied by -1 plus this number. Okay, so the equity investor came up first with 1.3 billion, and then the equity investor is receiving all this money back, which in total is going to result in a positive 13 billion Thai. Okay, and this is the row we're going to use to calculate the NPV and the IRR. So let's going to do it right now. So here we're going to have the hurdle rate. The hurdle rate, that's a percent. I don't think we have a hurdle. Do we have one? Let's see the name to sell. No, right. So let's gonna go over here, and where's the hurdle? Here. So I'm gonna click hurdle rate. Cool. So it's gonna be equals to the hurdle. That's fine. So just have to format. This is a percent. That's good. This is the hurdle rate that I can say equity hurdle rate. Cool. The equity NPV, it's going to be in Thai, and that's going to be equals to the NPV of what? The rate. We're going to use the rate of the equity hurdle and the values. The values are over here. Okay, so I'm going to press enter, and there we go. So we have a 1.4 billion Thai as NPV. So if it's a positive, it means that the NPV of the project is higher. It's bringing more returns than the investor was expecting. We can check this by calculating the equity IRR. That's a percent, and basically we can say it equals to the IRR of what? Of this cash flow. Okay, cool. It's 34%. There might be something wrong here. I don't think this is the correct number. Let's see. Oh yeah, okay. It's too high because there's a bunch of costs that we still have to plug in here. So that's why it's too high. Okay, but we can calculate all. We can come up with this later. So we're gonna say it here. It's gonna be a 0.0, and here's gonna be a percent. So that's gonna double check a few things, right? So the first thing is, remember I told you you'd be able to use the NPV and the XNPV, right? Why is that? Because every single period in our timeline, okay, consists of 365 days. It's the same length for every single period. So we are fine to calculate the NPV with the NPV formula and the IRR with the IRR formula. If we were to have different time frames for our periods, we would so how can I say, we would have to use the XNPV and the XIRR formula. Okay, so that's the first thing. The second thing is, let me go back here because there's something that I would like to share with you. I think should be below here. So assume this the same, and round the NPV to wholes, the same for IRR. Okay, so we're gonna do this right now. So this is already there. this we have to do like this. Okay, so we have 34 and this number here. There's one more thing I would like to answer. I think we have to calculate the IRR. I don't know where that is, using the end of the year. Let me see, and let's see if we can find it. Dividends. Okay, I think it's here. Convention, where all cash flows for each one is assumed to occur at the end of the period. Okay, and that's what we're doing. Okay, so when you use the NPV with this as it is, we're gonna assume it's gonna be paid at the end of the period. Okay, so particularly because we are account for this number over here, let me just, actually that's wrong. That's wrong. That should be like this plus this number. That should be the correct number, and that should be the IRR. The IRR is correct, and the NPV is like this. Why is, okay, so that's very good. So let me rephrase. Okay, so before we used to have something like this. Okay, so here basically what we're doing, we're bringing every single cash flow back to the 31st of December. Okay, so it's NPV everything back to the 31st of November. And I can prove to you that this is the case, because you can say that's going to be equals to this divided by what? By, let me do the calculation, 1 plus the discount rate to the power of this number. Okay, so it's going to be the same number. Let me do the same here. And if we add everything together now, we have the 1.6. Okay, so that's what we have. So we're assuming we are calculating everything to this particular rate here, and that's what we have. You see, so this is the correct way. If we were to do the other way around, where we were using all these numbers in here, that would be wrong. Okay, so that's one thing we have to take into account. So again, I would recommend you to watch the video on the NPV, XNPV, IRR, XRR that I did, right? So you make sure that you calculate properly. So this is the correct way, okay? The first period should not be part of the NPV formula, right? Okay, so now I can delete this, and the calculations are correct, okay? So that's the first thing. Okay, so here we have our RR. The RR is fine. It's we should include it, because otherwise you wouldn't have the first period in the calculation, right? If you were asked to calculate the RR for the 31st of December 2022, what you would have to do is the following. You would have to add a very small negative number here. Sorry, not here, but here. Then you would have to get your cash flows to the equity investor, right? And from this cash flow here, you would calculate your IRR. Okay, so equals IRR, and then it would go all the way here. Okay, and that would be your IRR. You're gonna see that I think it should be a bit different. You see here it's higher than 34. Oh, it's the same. Okay, so let me see, everything's correct. Okay, I don't think it's exactly the same, but yeah, I see there's a difference here. So it's not the same because the number is too small. So that's why we cannot see this thing. Let me see if we can just do like this. Let me see, that's gonna put as a comma. Yeah, it's not 0. It's a very, very small number, but it's not the same, okay? Okay, so that would be the right way to do it. But because we're not doing this, so we can get rid of these things to here, okay? So these numbers here, they are being calculated at what? 31st of December 2023. And that was one of the requirements of the exercise, okay? So NPV and IRR, they always have a date, okay? That you need to refer the date to, the results to, okay? That's it. So, in theory, we finished the exercise with the cash flows, but now we have to come up with these values here, right? So we still have to fill it up. So this is where we're gonna have here the supporting calculations, okay? And this can be on B. I'm gonna set these as H1. And how we're gonna do it? So the first one we're gonna calculate is going to be our tax rate or tax liability, right? So let's gonna see how we're gonna do it. So we're gonna have our EBITDA. Then what we're gonna have? We're gonna have the interest payment. Then we're gonna have our depreciation. And when we add all these things together, we're going to have our taxable income. So that's what we're going to have. Cool. Let me copy this for now. Copy, and I'm going to paste it over here. So let's see what we have. So the EBITDA we have, so it's over up here. Our EBITDA is over here. Okay. So let me see if that is correct. Okay, cool. So we don't have the interest payment and depreciation. We're going to have to calculate that, but we can already say out BP equals sum. Okay, so I'm already adding everything together. Very nice. Let me just Control Z, Alt S formula, Alt HBP. Okay, there we go. So we have this. I just want to make sure we have comma 0. Okay, cool. So we have the taxable income, right? So now we can calculate how much tax we're going to pay. So we have the tax rate. And again, I'm going to do these calculations later because they are supporting calculations for our tax liability. So we're going to have the tax rate, and then we're going to have the tax liability. Okay, tax rate is going to be a percent. This is going to be millions, right? So what is the tax rate? Do we have? No, we don't have one, so we're going to get it. The tax rate is 15%, I guess. Let's see where that is. Income tax. So I'm going to put here tax rate equals to tax rate. So there we go. We're going to set it. I can copy the structure from here. Control C, Alt EST, enter. So we have the tax liability. And then I can just copy the same structure as we have here to calculate our tax liability, right? So let's see. It's going to be equals to what? Equals to our taxable income multiplied by our tax rate. I'm going to anchor here 3 times, multiplied by -1. Why? Because this tax liability is cash flying out of the project, right? So I'm going to copy and paste, and here we go. Okay, so that's our tax liability. Cool. So now we can calculate 2 things, the interest payment and the depreciation, to plug the numbers in here. I'm going to go first with the, I'm going to add one here. So I'm going to just make this smaller. Sorry, let me see. It's easier way to do it. So just get in normal. This is going to be our tax liability. Okay, so here we go. And now we're going to have our depreciation. Okay, oops, there's a mistake here. Okay, cool. Depreciation we're going to use an account, right? So that's the easier way for us to do it. So I'm going to have here, I'm going to copy, just let me copy from my other sheet here, just to make it easier and faster. Okay, so copy, I'm going to bring it over here. That's what we're going to have. We're going to have an open balance. We're going to have our additions, depreciation, and close balance. So there are some other assumptions here. As I said to you guys before, we were not given how much depreciation, how fast to depreciate the assets, what is the depreciation basis, right? So depreciation method, nothing was given to us. Okay, so what we're going to assume, and you can, again, if you want to do an assumption book, you can say that we're assuming this type of depreciation in this amount of years, and we're going to assume that we're going to depreciate 100% of the capex. That's what we're going to assume. Okay, so we can write this down. We can show this to the employer. We can send that over to him or her. Okay, so that's the assumption. So let's see. Let me see how to start it. So the open balance. So this is an account, right? So we're gonna keep track here of how much we have in our books to depreciate. So that's the purpose of this account. So the open balance is always equal to the closing balance of the previous period, right? So that's what we're gonna have here. And because we're using this cell over here, right? So I'm gonna make sure that we assign it or give a signal to whoever is reading that there's something going on here. And the closing balance is gonna be the sum of everything. So I'm gonna select everything, set as comma 0. I'm gonna copy and paste across, okay? And here I'm gonna set a top border. There we go. Cool. Sorry, I pressed F1 Cool. So what is the addition? The addition is the capex, right? So because we only have one period, all the capex are going to be added to our account on during the construction phase. Okay, so we can bring over here the total capex, right? So we can set this as an external as comma 0, and that's basically it. And now what I'm going to say if what, if, or even easier, we don't need to do an if, we can say equals to this. I'm gonna press F4 3 times our flag. We have a flag here, so if this is, I'm gonna press F4 twice. So if this is true, we go over here, and the question is it positive or negative? So this is going to be positive, okay, because we are accumulating in our account, so that's why it's positive. So I'm going to copy and paste across. Okay, there we go. And I'm also going to have this over here. Very good. So we accumulated in the first year 2.6 billion, and now we have to depreciate this, right? So that's what we have to do. So at which rate we're going to depreciate it, right? So depreciation rate is going to be equals to the 1 divided by our straight line depreciation. So we have to depreciate equally over 15 years the capex, and that's going to give us a rate of 7% or 6 something. Let's just going to fix it. It's going to be 6.67, right? So that's what it is. So, and when we add those things over the 15 years, we're going to have the full depreciation. So I'm going to bring here the number of years. Okay, depreciation. It's going to be the depreciation years. So it's going to be a flag. It's a bit big now because we have the, like, why it's big. Let me see. We can reduce it, right? Yeah, let's going to reduce it. Cool. So don't need to be that big. Okay, so this is 15. So I'm going to set this as a external comma 0. So how are we going to do it? So equals if what? If the period here, press F4 twice, is equals less or equals than the number of years over here. I'm going to press F4 3 times. Then we're going to have what? We're going to depreciate this. I'm going to press F4 3 times this 3 times, right? Otherwise, it's going to be 0. Okay, and I also have to multiply by the flag over here because I don't want this to be accounted for during the construction phase. And I press F4 twice. Okay, so let me just copy these things here so you can see exactly what I am doing. Okay, so that's exactly what I'm doing. And let's gonna copy across. Sorry. Right, so you see the numbers are the same, but this needs to be a negative number. So I'm going to multiply by -1, copy and paste, and there we go. Okay, so let me just make it a bit bigger so you can see. So here we go, right? So one thing I can do though is to, yeah, that's fine. I mean, that's super fine, right? So the numbers, the important thing is that we depreciate the full thing 100%, and these numbers on row 105 and 106 should be equals with opposite sign. Okay, so let's gonna see. So we are accumulating 2.6 billion, and on the first year we're going to depreciate 1/15 or 6.67%, and we keep depreciate everything until the end of the project. And we're going to see that we're going to depreciate on year 15, but still have 15 more years to go with the project, right? So that's why I am not going to do a condition here for when depreciation period is greater than operations time, okay? Because that may happen, okay? Who knows? Maybe you have a 10 years lifetime project, but you're depreciating at a 15 years, so then you have to account for this. I'm not gonna do this here, okay? But that's something, if you want to try, you can do on your own, and sometimes it's worth, okay? Because in this case here, we don't have any sort of construction during the operations or revamp of the site, okay? Let's say in this particular project here, you have to change the blades of the wind farm for whatever reason on year 25. So these blades will have another 30 years of lifetime, and they will not be fully depreciated on year 30, right? So we have to account for this. But because we don't have these in this exercise, so we can skip it, okay? but that's something you can do on your own and see if you can manage to get the logic of the formula in place, right? So now we have the depreciation. I'm going to go over here. I'm going to say equals to this number, right? So that's how much you're depreciating every single year. Okay, and of course you're depreciating the same as the capex. Okay, so now we can go for I can get rid of this here. This is done. I did a bit faster. Okay, cool. So now we can go and do the debt. So I'm going to go over here. That's going to be our debt. I'm going to set this as comma 2. And we're going to basically have a debt account. So I'm going to copy. Basically, let me copy the whole structure and then we can delete whatever is needed. So we're going to have that, right? So we have to have the additions, right? How much debt we are adding to the project. Then we're going to have the repayment or the payment, principal payment. Okay, so I'm going to get rid of this. Let's see, and I'm going to delete those two here. Okay, so the additions, what is going to be the addition? This is going to be the total debt, and we do have this information, right? So that's going to be, it is up here. So this is the debt. There we go. That's our debt. That's a in-sheet calculation. So I'm going to leave over here. And actually I can have the same formula. If I anchored everything properly, that's okay. So I'm going to copy and paste across. And there we go. So you see, this is the reason why you want to anchor things properly, because when you copy and paste things across, and we're going to do it hundreds of times when you're doing your financial modeling, everything comes very easy for you. You don't have to make that many changes, okay? So that's why always do anchor things properly. Okay, principal repayment. There is something that is said on the principal repayment. Let's see, I think they tell us that they want the principal to be repaid with equal installments. Let's see where that is. Let me installments. Let's see, installments. Okay, there we go. The principal here, the load principal is to be repaid in equal installments. Okay, So that's a point where you might have asked questions. Okay, the first time I read it, it says loan principal is to be paid with equal installments over 15 years. Let me take that back. The first time I did it, I've had equal principal payments. Okay, so I set my debt to be paid with same principal throughout the lifetime of the debt, which is basically what's written here. Then it's equal installments, okay, which means that every month you pay the same thing, so it's fixed, and then your debt to equity, so your interest to principal repayment changes over time. Nothing is fixed, okay, but your equal installments is fixed. Okay, now that I'm rereading this again, I don't know which one we should do. Should we do a fixed principal or should we do equal installments? Okay, equal principal or equal installments. Not really clear to me what it really means here. I can go both ways, but what I'm gonna do, I'm gonna do equal installments. Okay, that's what I'm gonna do. Okay, so we're gonna change the value of the debt, sorry, of the principal and the interest over time, but we're gonna fix the installments over the 15 years. Okay, that's my understanding of what's written here. Okay, so how can we do it? So the first thing we're gonna do, there's a very nice formula in Excel that gives you the total payment. So the total payment, that's going to be over here. I'm gonna bring over here. That's the PMT formula, okay? But the PMT formula need to get the interest rate. So one thing I am going to do now, we have the debt, so I'm gonna have the interest, the interest rate. That's a percent per what? Per annum. Okay, that's what the percent is. So let's see where the number is. So we have the interest rate over here. We also have the tenor. So we have the tenor, which is going to be, that's years. That's going to be equals to the number above. Yeah, there we go. That's the tenor. right? So I'm gonna just make sure we have the right formatting. Okay, there we go. So now I can calculate the total payment. That's going to be equals to what? The PMT, there we go. The rate, the number of payments, which is this, the PV, which is the present value of the debt, that's this one here. The future value is 0, we're going to repay everything, and the type. And here we're going to say they're going to pay based on the beginning of the period. Okay, that's what we're going to do. There we go. I'm just going to format this 2,0, and there we go. So we're going to make 15 payments of 115. Let's see if that works. So I'm going to do one more thing. I'm just going to add 3 more rows here, and you'll see why in a minute. I'm going to delete this. So what I'm going to have here, I'm going to have the principal. I am going to have the interest, and I'm going to have the total, right? So I'm going to copy this thing. I'm going to paste over here. I want to get rid of this. This is correct. It's going to be like this. Okay. So what is our principal? The principal payment is this number that I just, sorry, that's not the principal. This is the total payment is going to be 115, right? So that's the number we have. So it's going to be equals what? Equals if what? If this number here, I'm going to press F4 twice, is less or equals to what? To the total tenor, which is 15. I'm going to press F4 3 times. Then we're going to have this number, right? I'm going to press F4 3 times. But it has to be a comma, not a period. Otherwise, it's going to be 0. Okay, we have to do one more thing. Let me show you what we have to do. Control Z, let me Alt ES formula, Alt ES T. Okay, so there we go. Sorry, Alt HBP. Okay, so here we go. Let me just now comma. Let me see. Has to be comma 0. Sorry, there we go, comma 0. Okay, let's see if that's correct, right? So we have to pay 115. Let me just 115 all the way through to year 15, but we are basically, that's not what it is in here, right? So let me see. This is, which year is it? This is year 15. So there's something wrong here. What's wrong? We should not pay in the first period, right? So I'm going to also multiply this by the flag. So we're going to multiply by the flag. I'm going to press F4 2 times, and now we have the right number. Or there's something wrong. There's still something wrong, right? Because no, that should be okay. Yeah, sorry, I was getting confused myself. So that should be okay. Cool. Very nice. So what is our interest payment now? So I'm gonna copy this across. Okay, so there we're gonna have across. We're just adding. So why we're not getting this number here? Okay, well, a bit weird, but that's okay. So we have our interest. So what is going to be our interest? The interest rate is 4%. So I can even move to the one here. I can delete this, and we can set this as percent per annum. I'm going to fix this as a table, and I also have to fix this as an internal calculation. There we go. Okay, so this I can delete. So what's going to be our interest now? Our interest is going to be 4% of the open balance. And I think they also mentioned that in here. They say that the interest should be paid based on the open balance somewhere in here. Let's see. We'll come based on the beginning balance. Okay, they call beginning balance. Okay, that's fine. So I'm going to say that's going to be equals to this number, 123 times the open balance, this number, 12. We're going to copy and paste, right? So this should be, we can say this is a negative number, right? There we go. So what's going on here. Okay, I also have to make sure that's gonna be fixed later on, okay? Because we're charging more, but it's gonna be fixed later on. That's very nice. So I'm gonna come over here and I'm gonna add the interest payment equals over here. I'm gonna copy and paste across, and everything should be fixed now. Let's see. No, there's something wrong. There is something wrong. Yes, because now I also have to get this number here and connect over here. Now we might get things correct. Let's see. Now there's some mistake here. Let me see what's wrong. Let me pause and I come back to you. Okay, I think I found the mistake. The mistake is that I need to make sure that this is only paid, of course, during the 15 years, right? So we don't pay any interest after the 15 years. So I think we have the formula where we calculated the, let's go here. I just want to copy this because that's the structure. We are checking whether this is 15 years or not. So we want to have the same here. So if it is like this, otherwise it should be 0. We don't pay any interest, right? So I think that should be okay. Okay, that looks correct to me. We're going to double check all those things. And now the principal should be the difference. So this minus this. And of course, when we add all the things together, we should get to this number here because that's the principal we are repaying. Sorry. Yeah, the principal we are repaying, right? So let's gonna see. Fingers crossed. Okay, it didn't work. So what's going on here? I really need to check what's going on here. So let me go back, stop and come back. Just 1 second. Okay, I got it what's wrong. So the first thing that is wrong, right? So this is principal payment and I set this as interest. So this should be the one above here. So that should be here and we should now copy and paste across. So that should be the principal. But the numbers do not match. They should match, right? So whatever I got as that, we should repay everything, right? But the mistake is in this formula here. This should be the end of the period, not the beginning. I got a little bit confused with the NPV formula because they were telling this that should be the beginning of the period. But for the PMT formula, we should use the end of the period, okay? At least for this exercise here. So when I plug in here, what's going to happen then, we're going to see that all the numbers here are going to be 0. So I'm just going to show you here, set these as comma 0. Then I'm going to basically repay all the debt on year 15, right? So we don't have anything here, there's nothing here, and these two numbers here match, right? So if we scroll up, we're going to see that this is happening exactly on year 15, okay? So as we can see over here, right? So that's year 15. I'm going to scroll down and we have here. So let's going to refresh. Let me just first copy the formulas and here we go. So what are we doing here? So we have a debt account, right? Where basically we're adding all the debt we took and we are repaying the debt. So that's the first thing. Then we have the input, so the tenor and the interest, and we calculate with the PMT formula what should be the total payment, which is principal plus interest. And I just plug this number here, making sure that I only account for the tenor of the debt, right? Good. The interest payment is calculated based on the open balance of the debt, okay? So whatever we have as open balance, we're going to apply 4%, and that's it, okay? So that's what we have up to year 15. And then the principal is calculated as the difference between whatever we paid as, whatever total payment we calculated minus the interest paid for the period, right? And that gives us exactly the same amount as the open balance. So everything matches and everything is fine here. Then the other thing I did also, I just set up here and I added the interest payment to our tax liability calculation and it got to this number here. So I think now we have all the numbers calculated correct. I don't think there is any other mistake and we should be ready to go. Let's gonna see up there if there's anything we can add. Okay, so we have these two numbers already, even this one here. So basically the only thing missing is going to be the working capital. So let's gonna see and I'm gonna fix this. So I'm gonna copy the structure. First I'm gonna get rid of this, right? So should be no fill. So what is the, oh sorry, we don't have the working capital. What do we have? We have the tax paid already. So the tax paid is going to be, I'm gonna copy the structure. It's going to be equals to tax paid, we're gonna go equals to, where is it? It's tax liability here. Right, I'm gonna copy and paste. Okay, then we have also the principal and the interest payments, and we have both over here. They should be negative, so interest. You see, that's the principal and the interest. Now I'm gonna copy and paste, and there we go. Right, just make sure the numbers match. They should match. So yeah, there we go. And now the only thing missing for us to calculate the project is basically the working capital. I also want to copy here, here, and I think we have everything in place. Okay, so let me just scroll up and down so you can see all the formulas and everything that we have. And if you missed anything, you can check your formulas and see where your mistake is, or hopefully you got everything correct. Okay, so that's it. Just going to scroll down a little bit, and I want to show just one more thing to you guys to see what I meant, right? So by eco, let's go back here, eco installments, right? Where do we have the eco installment things? So let's see, installment here. So the loan should be paid in equal installments, right? So that's what the loan principal is to be repaid in equal installments, right? So what is equal? The principal or the principal plus that? That's not clear. So we assume that the principal plus that should be in equal installments, and that's exactly what we have. So if you just graph this thing here, you can see that everything is paid in 120,000 Thai, right? But if you were to plug in, let me plug in these numbers here so you can see, if we were to plug in that and the principal, you can see that they change, right? But when you add them together, let me do it right now for you so you can see over here. You can see that when you add them together, they are constant, but we vary them over time. Okay, so that's what it's meant by equal installments, and that's the assumption I did for this exercise. Okay, very cool. So let me see now whether I think for now we can go to calculate the working capital. So let's gonna do it right now. Okay, now let's gonna do the working capital because that's the last row of our cash flow that it's missing, right? So as we have in here, and let's gonna get that up. So what is the working capital? So basically what working capital is, we need to adjust our revenue based on when we received and when we pay our bills, basically, right? So let's say we issue an invoice today, but we're only going to receive the payment for this invoice in 30 days. And the same happens with our payments, with our operations costs. So most of the time we're gonna receive an invoice to be paid today, but we're gonna have 30 days to pay it. So let's gonna go back now to the exercise sheet and see what they say here. So let's find it out here. Accounts receivable are collected 30 days after each month, okay? And the company pays its maintenance costs. It is only maintenance costs after 30 days, right? So that's the trick here. So for the account receivables, it's quite easy because that's going to be the revenues from the project. So we're gonna issue an invoice today, we're gonna receive in 30 days. It's gonna be a bit more tricky on the maintenance costs. So let's see how we're gonna do it. So I'm gonna go back to our cash flow. Actually, first, I'm gonna copy already the full structure of the working capital just to save us some time. And I'm gonna paste it here. Let me just properly set up the tax. So we're gonna have the working capital, we have the debtors, and then we're gonna have the creditors. So let's gonna start with the debtors. The structure is the following. So we're gonna have an account, right? And we're gonna calculate the open balance and the closed balance. And we're gonna have two inputs. One is the revenue that we're gonna receive, or that we are gonna have accrue. And then we're gonna have the cash that we're gonna receive from these revenues. So let me go here and I'm gonna show you exactly how that works. I just want to copy, that's why I don't need to copy anything. So just let me go over here. I want to copy here, and then I'm going to also do the same over here. That's okay. So we know that we are going to be receiving our cash with 30 days difference, right? So I'm going to go over here, and we're going to get accounts receivables. Over here is going to be a 30 days. So let me set this up as an external, comma 0. This is going to be days, days. And then we're going to have a table. Very nice. I'm going to just go over here because we're going to have the cash paid. So this is going to be equals to this number here. Very nice. So the structure is getting here. Let me also copy this because we're going to need it anyways. And I don't forget later on. Very nice. And then I think I can also copy these things. So I'm going to copy these over here, and over here. And there we go. Cool. So we have most of the things we need right now. Nice. So we're going to have, I think it's wrong. No, it's right. So we're going to have the open balance. It's going to be equal to the close balance of the previous period. So what we're going to do here, we're going to set this as a empty and here as a comma 0. We can copy and paste everything across. So Control Shift right, Shift left, Enter. So there we go. We have all those things here. The close balance is going to be equals to the sum. So Alt equals Enter. Why there's a mistake here? Let me just delete this. We can delete this for now. So that's okay. That was something that was left from the copy and paste. So I will also delete the one below. Very nice. So I can also copy and paste. I'm going to add a top border, Alt HBP, and there we have it. Nice. So we have the whole thing and everything is 0, right? So what is the cash received? So this is the revenue from the project, right? So we have this, and this is over here. You will also have the revenue on your income statement. So there we go. And that's when we're going to issue our invoice, right? So we generate in a given month, let's say in a given year in this case, right? And we're going to receive this cash, right? But the thing is now we're going to receive it only 30 days after the invoice, right? So in fact, we're going to register a revenue of 519 million Thai, but we're not going to receive everything in this given year, right? We're going to receive 11 months out of the 12 months in a month because we have 30 days, right? So how do we calculate it? So that's where the trick part comes from, the working capital. So let's see how that goes. So how do we go about it? So let's gonna think for a while, right? So first we have to calculate the fraction of the year that we're going to receive. So it's going to be equals to the days in year minus the days that we have to give for the working capital, which is 30 days. I'm going to fix this by pressing F4 3 times, right? Then I'm going to divide it by what? By the days in a year. So now we have the fraction of the year that we want to calculate, okay? Then I'm going to multiply this by what? By the total revenue, and then you have to subtract whatever we have as an open balance. So that's basically calculation. I'm going to just copy and paste everything across to see if everything's correct. So that's our calculation over here. I just need to make sure we have a comma. Let's gonna do comma 0. Okay, so that's what we have over here for now. Cool. Now we have our balance, and there we go. So basically we are going to receive 335 days out of the 365 days of the year, right? So that's the fraction we're going to receive. And then we're going to just add here. There seems to be something wrong, and I think there is. I have to make this as a negative number. So this should be a negative, right? So let me just gonna go here, multiply everything by -1. I think now this should be okay. Let's see what's wrong here. No, there's something wrong. Let me just double check. So let's go back. minus, so let's see, we have, yeah, that should be a negative number here. Just a second, it's not everything. I see this fraction here should be negative. Okay, so let me see if that makes sense now. Right, so we're gonna, okay, there's some delay on my Excel. I don't really know why. Okay, now we have double negative 1. Okay, so it should be okay now. Let's see. Okay, there we go. I think now it's correct, right? So let's go over here. Yeah, looks like we are correct here. Okay, so basically we're gonna issue an invoice totaling 519 million, but we only got 476. So the closing balance for us that we have to carry over to the next year is 43 million. Then we're gonna receive 525, but out of this we only got 525, and then we're gonna go and the leftover is 43. So that's basically correct, right? I just want to make sure this is correct over here. So we have the fraction. Okay, we are reducing what? Okay, that's correct, basically. Okay, cool. So we have everything done in this line. Now what we have to calculate is the net working capital adjustments, right? Because this is just show us the open and closing balance, but now how much more cash we need to add, or we're going to be able to take away from the business because of this difference in working capital. In this case here, we have mostly to add more cash. Let's gonna see how that works. So the calculation here is pretty straightforward. So what I have to do, basically, we have to get the difference between whatever open balance is and your closed balance, and we gotta add it to the project. So let's gonna take over here. So the difference here is how much money you have to come up with, okay, for each one of the years. So that's the first one. We're gonna keep coming, and that's wrong. Should be this one here, right? So I'm gonna copy and paste. So that's how much you have to adjust your capital in order to make sure you're gonna be able to match your capital requirements. Okay, so I'm gonna copy and I'm gonna paste this along, and there we go. So that's what we're gonna have, and at the end of the day we're gonna have 0. Let's just see one thing here, because one thing we need to make sure that is correct is at the end of the project lifetime, which is over here, we want to make sure that we basically get rid of or receive or pay back all the cash, right? So whenever we are on the last period of the operations, we have to make sure that we get back all the open balance of the account. So for this, we need to do an if condition in the beginning. So we're going to say if what? If this date here, or kind of a bit different, if this, I'm going to press it for 3 times, is equals to ops years, then what? Then we're going to get exactly the, let's go back here, we're going to get the open balance. Otherwise, it's going to be this. Let's going to check. And we need to see what's going over here, and that's exactly correct, right? So in the last period, we're going to receive whatever cash accumulated we have. Okay, so that's it. There would be no real problem if we were to leave the way it was before. That's also possible, okay, because even on the last period we still have 30 days to receive the money, but you can just leave like this if you want to. Okay, very good. So that's what we have. Let me see if I can just copy and paste everything here. Let's see what we are going to have. There's something red that doesn't match. So the expense, right? So our operating expenses go, it is this one. Oh, but that's not the total expenses. It is only the maintenance costs, right? So let's gonna see what we have. Here's the maintenance costs. Okay, so we're gonna go and find the maintenance cost. Where is it? It should be over here. Maintenance cost. There we go. It's this one here. Cool. I'm gonna copy these numbers and paste them over here. I'm gonna also copy this one and paste here. I'm not sure if that's correct. Let me just go back. Equals. I'm gonna copy and Alt S formula, Alt HBP, and then we can also do comma 0. Okay, so this is what we have. And I think the formula should be the same here. Let's see, Alt ESP, sorry, formula, F, enter. We are going to do a comma 0, and it looks like it's correct. And I think I can also copy over here. And we're gonna copy and paste. And it seems that everything is fine, right? So we need 609, so we're paying just this maintenance cost after, right? So that's basically what we need. So the only thing that we have to add is one for our creditors. So that's basically it for the working capital. And we have to now we can do this thing here. Let me copy and I can paste those things here. That's going to be equals to the net working capital adjustments for the debtors. Then we can do the same for the creditors. And here we can add all together, and I can do Alt HP. We can copy and paste. Yeah, here it keeps coming. Let's see, Alt HB and Alt HB. There we go. Okay, cool. That's 0 and that's 0. That's correct. So that's exactly how it should be. Okay, so basically we have finished our working capital, and we also have finished the project A in sheet, or the cash flow calculation. And now there's one more thing. Sorry, we have to plug the working capital here, right? So let me get rid of this. Now I'm gonna come and paste, and I'm gonna say that this is equals to the adjustments over here, which is the sum of both. And then I'm gonna copy and paste, and here we go, and that's it. Okay, so now we have finished. The next step now is to really start a new sheet where you're gonna come up with all the 3 statements, and then we're gonna basically finalize the exercise. Let's gonna go there now. Nice. So before we go to start doing our financial statements, I just need to copy here. I'm gonna paste on row 137. And that's basically it. I also have to copy and paste the currency, and we are good to go. Let's gonna just go through the whole thing once more, but I really think we are done by now. That's very nice. So let's gonna move on now to start doing our financial statements, because that's one of the requirements for this job interview exercise. And once you've done it, then I'm gonna have to come back here to fix the way we're calculating the dividends to be paid, right? So that then we're gonna be finished with project A, but then we have to do project B and project AB all together. But because of the setup we have with all the major input cells with naming, that's gonna be very, very easy for us to do. But we're gonna get there. Let's go to start now with the financial statements for project A. So what I'm gonna do, I am going to copy this. I'm gonna hold Control. I'm gonna click on my mouse on the left button. I'm gonna drag it and yes, unleash everything. So we're gonna have a copy of project A. What I'm gonna do, I'm gonna say FS for financial statements, and it's gonna be project A. And there we go. And I'm gonna get rid of all these things here. So I press Alt 3, and there we go. So I have those things here. Let me see what is the best way for us to do. I just want to do one more thing that I forgot. Okay, so that's kind of important, I would say. So one thing that I always like to do is to put some sort of headings above everything on the first row of each one of the sheets, right? So let's see, we do have one for the inputs, and I forgot to add that for the project. So I'm going to do it right now. So I'm going to select everything. We have already the headings in here, and this is going to be the cash flow project A. Okay, I'm going to press Control Page Down now to move on to the next one. I'm going to add the headings on our financial statements. So I'm going to select the whole thing. I'm going to press Alt 2, go to headings, and then I will just have the financial statements project A. Okay, so that's good. We have it over here. And if you're just wondering how I can add my cell style on the rainbow above here, we just have to come here where you do have your style, right click, and you're gonna have to add. I have hide here because mine is already there. But let's say if you wanna have this one here. Oh, sorry, it's the first one, which is already grayed out. So this is the one that you have to click on. Okay, so you have to click and add or hide. Okay, so that's the way you do. So now let me go back here to project A. So whenever you go down, you can clearly see that you are on the cash flow sheet. Okay, let's gonna move on now. We have here the financial statements project A, which is good, but we don't need to have in here the timeline. Okay, so the only thing you need to have in here is the years, basically. So you can either leave things as it is right here, or what you can do, we can basically just set these as construction or equals to construction year. Okay, set these as normal because it's going to give you the 2023, and then you have to move on. We have to copy these over here, right? So I'm going to leave as it is. Okay, I'm going to leave here the dates, and here what I'm going to say, that this is the year, one here, and then we have every single year the same, but because the formula differs, I just want to copy and paste across, and there we go. Okay, so we have the same structure. We can get rid of this one here by pressing Alt 3 again, or you can go over here to Home, Clear, and Clear Formats, and you can see I actually have the clear all. I clear everything, not on the formats. So this is already on my quick access toolbar. So that's the correct name for this little thing over here, which is very handful. Okay, so now we have here. So what are we going to come up with? So first we're going to come up with, so there are three financial statements, right? So we have the income statement or P&L. So that's the one I'm going to come up with first. I'm going to set this as heading number 1. So what are we going to have? We have our, I'm just going to have here the revenues. Then we're going to have our operating expense, and we have a few of them, right? So I'm just going to copy here from what I've already done in the past just to make things faster. And Alt ESV. So we have the personnel, maintenance costs, land costs, miscellaneous, and community fee, right? I think we have to add one more thing here. Huh? Let me see, but maybe we can do that a bit later. So let's see what we have here. Retirement costs. We have to add our retirement costs also there, right? So I'm gonna go over here and add the retirement costs. And there we go. So now we have everything in place that we need. That's very good. Then we're gonna just set this formatting here to be an H2, and there we go. Once we calculate it, we're going to be able to get our EBITDA, and there we go. Cool. So what I'm going to do now, I'm going to go back to my project A sheet by pressing Control Page Up, and I just want to copy this structure here because that's also going to be needed over here. So I'm going to paste here. Okay, there's a circular reference because we can get rid of those things except for, let me go back. Controls, I just want to delete this one here. Okay, it seems that we are getting everything. BF, yeah, that's BF. So the formula here goes all the way through, so that's correct. So I'm gonna copy those two and I'm gonna paste over here. And I'm gonna also paste over here. Very good. Okay, so what are our revenues? So that's quite easy. We just have to go say equals to, go back to project A, Control Page Up, and find our revenue over, where is it? Net revenue. There we go. So this is the first value. We press Enter. We copy and paste across. Right. Then we gotta get our personnel. One thing we can do, instead of getting everything, we just get the sum of all the operating costs, which we do have below here. Right. So we could get this one here, bring this row as an equal to the total operating expense. It's okay for me, but I think it's nice to see every single operating expense. And if you were to have more source of revenues, we would also have to add them all together. So I like more to do one by one, unless it's too many and then eventually you can categorize them. But as it is here, I don't mind to have 5 or 6 operating line costs. So that's fine for me. The first one is the personnel. Just need to make sure that we're going to get the correct one. Then we're going to have the maintenance cost. That's this one here. Then we're going to have equals to the land cost. Land cost is over here. Then we are going to have the miscellaneous down here. Then we're going to have the community fee. Community fee is this one here. Then we will have the retirement costs, right? We're going to copy. We are going to select everything. We're going to paste across, and that should be correct. And now we're going to sum everything. I don't really care if you just add them one by one or if you use the sum formula. I think sometimes it's easier to use the sum, like when you have to add a lot. I think it's, so when you have to add a lot of items, I just think it's better to use the sum. But if you have to add 1 or 2, it doesn't really matter, right? I think it's pretty clear what we are doing here. We're gonna bold this one here because that's a pretty important information for our income statement. Then what we're gonna have, so then we're gonna get rid of the depreciation. So depreciation, okay, I'm gonna copy this here and I'm gonna paste. That's fine. So now we can go to our depreciation and we can get it below here on the supporting calculations. So we do have depreciation. We can get the depreciation from here or from here. I would rather go to the source where we first calculate it, which is down here, because on this row here, on row 99, or sorry, 98, it is referring back here, right? So if we keep referring one cell to another, to another, to another, to another, that's called daisy chain. I'd rather go directly to the source. So that should be this one here. We copy and paste. That sounds correct, 2664, and we have the same number down here. So that's cool. I'm gonna go back now to the depreciation, and then what we're gonna have our EBIT, which is earnings before interest and tax. There we go. So I can basically copy the structure, put the same numbers. So this is going to be equals to what? Equals to this plus this. We copy and paste everything across, and we have our earnings before interest and tax. So now we can add our, I just want to do like this. I'm going to also bold this one here. So now we can get our interest payment or payment, right? That's okay. And what we can do here, we can just copy the structure, paste over here, and we can go equals to control page up. Where did we first calculate the interest was just on this row over here. So you can see that's equals to this, enter, copy and paste across, enter, and there we have. And just to remind you guys again, all the signs of each one of the calculations is correct. So I just have to add them together, right? So the EBIT is the EBITDA minus depreciation, but because we have depreciation as a negative number already, we just have to add them together. And it's going to be the same for our EBIT. And we just have to Control D. This is going to be equals to this plus this. You can see here I didn't use the sum formula. I just add them together because to me it's just faster. Instead of typing sum, I just one equals to the other, and I'm done. I'm going to also make this bold, and then we have our EBIT. Now we will go to our tax. So we're going to go to our tax, and that's pretty much the last calculation we have to do. So tax, I'm going to Control C. It's going to be tax. Our tax also has been calculated somewhere over here. Let's see, we have the working capital. No, it's above. It's here. So that's where we first calculate the tax liability. Enter, copy and paste, enter. This is going to be this plus this. Enter, Control C, Alt yes, sorry. Shift Control right, Shift left, and we have everything. Sorry, then this is going to be our net income, basically, right? Okay, a few things in here. Let's gonna have here our formula to tax, so you can clearly see what I'm doing, but it's equals and plus, so there's not really a need for you to see what's in here. right? So I can just see where am I reference this to. That's fine. So I'm just pressing Ctrl C and Ctrl V all the way through. And that's basically it. Now just press enter when you get it done. And one thing you don't see here for now, it's like, what is the currency, right? And usually what you're gonna do, you're gonna come here to the income statement and you're gonna say, let's say TBH million. So that's clear that every single row in this sheet is in TBH or THB, sorry. THB, yeah, just to confirm. THB in Thai baht, I guess. Million, right? So sorry if I'm not getting that right, but that's what it is. Okay, here we go. So now it's correct. See, like, don't need to reference everything as just putting the unit here, because in this case here, because we are in the financial statement, everything is gonna have, it's gonna be a currency unit. Okay, so that's it. We have our net income here. Very, very, very nice. And now that's the point where we can address what has been requested to us in the requirements. Let's see what about the dividends, right? So let's gonna read it through again, because what we did so far, it's not exactly what is in here. So let's gonna read, then we're gonna go back and see what we did, and then we're gonna see how we can fix it, okay? So let's gonna read. Dividends will be, let me just highlight here so you can see. So the dividends will be distributed at the end of each year, provided there is cash available. Of course, there's no cash, there's nothing to be distributed. Most likely have to have an infusion of cash to the project, right? So dividends will be paid from the company's retained earnings. So we didn't calculate the retained earnings yet, okay? But that's where you have to calculate the dividends from, okay? With the amount equal to the lesser of the cash available for dividends and the returned earnings, okay? No minimum cash balance is assumed. Okay, so we can have zero cash in the company, right? So first, where is the cash calculation? This is not the statement of cash flow. This is not a cash flow, okay? So the cash flow for our project is being calculated here. And we can see the cash flow right over here, where we have the cash flow waterfall. So this is the cash flow that the company has right now coming or going every single year to the company, okay, which I named here as cash flow available for dividends, right? So the company does have cash. There is not a single month that we can check here that the cash is negative, okay? Again, for the simplest of this exercise, I'm not gonna do the logic here to handle periods where we have negative cash flows. I'm gonna assume that every year we're gonna have this positive cash flow. So I'm not gonna do the logic in here, but you have to think about this on your own if you're going to be working in the industry later on, okay? But that's where the cash is coming from. But what has been requested to us is that we need to, where is it again? The dividends will be paid out of the company's retained earnings with the amount equal to the lesser of the cash available, which is this number here, right? And for dividends and the returned earnings, okay? Okay, so let's gonna see now how we can calculate the returned earnings. So the returned earnings basically, if you go back here, can be calculated as, we're gonna get the net income, then we're gonna minus the dividends. So we're gonna have the, let's put it like this, minus the dividends, and then we're gonna calculate the returned earnings. Okay, so that's how you would go about it, right? But that's not what's being asked. We need to get the minimum of the returned earnings and the dividends, right? But the dividends comes before the returned earnings in this calculation here. So what we're going to have to do, we're going to get the dividends between the minimum of the net income and the cash flow available for dividends, right? Because then once you calculate this, that can be paid as dividend, then we can come back here to our financial statement and calculate the returned earnings, okay? I'm going to do to you and we're going to see how that looks like, okay? So basically what we have to do now, we have to come up here with the dividends. Or dividends. That's what we have to come up with, but we don't have that information yet. We're going to recalculate it, okay? So how do we calculate it? We need to get the minimum between this row and this row. So what I'm going to do now, I'm going to add one row in here, or a couple of rows, okay? And I'm going to say, I'm going to just capture here the dividends, right? So I'm gonna set this as adding 2, right? And I'm need a bit more, a few more rows in here. Cool. So we have to come up first with that's going to be the net income. So net income, right? And we're gonna have our cash flow available for dividends. So I'm gonna get this one. I'm gonna paste over here. I copy and paste this across. And I'm also pasting this, right? So let's gonna get these numbers. And then we're gonna have the cash flow available for actual equity. Okay, that's going to be how we're going to calculate it. So I'm going to Control D here, Control D, and Control D, Control C, and there we go. So let's going to grab the net income. That's over here. Sorry, over here. Our net income is here. Cool. Copy and paste across. That's nice. Now we're going to get our cash flows available for dividends, which is this one. Copy and paste across. And here is where we have to calculate the minimum, right? So just want to have the borders already in place. Alt HP, and that's going to be which one? U. There we go. So what is set in there? That's the minimum between the two. So we're going to say equals to the minimum of this two here. And this is going to be our cash flow available to, let me do again, Alt ES formulas, Alt ES, it's going to be comma 0, and now we're going to Alt 8P U. Okay, so this is our cash flow available to equity. See, it is a bit different from the net income, and it's different from the available cash flow available for dividends, right? Because we're getting the minimum between the two. There's going to be a point in time where the minimum is no longer the net income, but it's going to be the dividends. Dividends, right? And there's a typo here, sorry. And that's going to be, let's see where that is. Okay, should be over here. That's wrong, right? Because we need to get this as a final one, so we have to fix this here. So this should come back to the cash flow available for equity. So we have to fix this, okay? But there is some point in time, I can't find it where that is. Oh, here we go. Where the minimum is the cash flow available for dividends and not the cash flow. So the equity and not the cash flow available for dividends, right? So that's what it is. And that's it, right? So just want to go back here to make sure, because I think I said it wrong. So here, all the cases in here, no, this is also, yeah, the minimum is always a change, right? So in this case it's here, and this case is over here. So you see it changes. So the minimum now it's the same, the minimum is here, it is the same, the minimum is here, so you change, right? So that's why we can calculate, right? Okay, so how we have to address one thing, we have to address this case here, the end here, because this should come back to the project. Actually, in here we should get everything back, right? So one question I have, oh, that's the working capital coming on the year after we finish the project. Okay, that should be okay. We had this discussion before, right? So we can leave this number here for now, because the assumption is that we're going to receive this money a year after we close the company. So we can live like this, that's fine. So there's no need to change anything in here, because the error or we wouldn't have to fix anything in this formula here. We would have to change how the working capital is being calculated, and we just discussed this a few minutes ago. So that's fine. We're going to leave this as it is right now. We don't need to take care of this as long as you understand what's going on, right? That's fine. So we pick it up, and if you compare now with what we had before we had the cash flow available to equity as being this number here, right? So these numbers are the same, as you can see by the sum. But now we have to change it. We have to, this number here, the cash flow available to equity, is equals to this one here. And we're going to paste and copy and paste, and there we go. So now we have the correct number here based on what has been given to us, right? So it has to be the minimum between the cash flow available for dividends and the retained earnings. But the retained earnings, if there is no minimum, should be the net income. So we're going to calculate, get the net income, compare against the cash flow available for dividends, and we're going to calculate the cash flow available to equity, which is the dividends that's going to be paid to investors, okay? So this is the dividends, okay? That's going to be available to, we can call even here the cash flow available, cash flow to dividends, okay? Gosh, dividends. There we go. Right, so this is the available, okay, but this is the one that is really going to dividends to equity invest. Okay, so there's a slightly difference in there. Not giving everything that is available, right? Now that we have this here, we're going to go back to the project A. We're going to say that the dividends is going to be equals to, I'm going to copy this. I'm going to copy the one above actually. I'm going to paste. It's going to be equals to this number over here, okay? But, okay, this is a cash outflow from the project. So I'm going to multiply by -1. Sorry, I have to go back. I'm going to multiply by -1 because that should be a negative number going away from the project. The reason why here is not a negative is because here I'm doing a separate calculation, okay, just to get to the IRR, because that's the main purpose, right? So I'm not sending money. The assumption here is that not we're sending money anywhere. I just want to calculate the IRR and the NPV of the project, okay? We also have to have this as a whole. That was one of the requirements for, from the project. This should be a whole number. Okay, cool. So let me go back to the financial statements, and that's what we have. So we have the dividends, and now we can calculate the retained earnings. Okay, so I'm gonna just copy this. I'm gonna paste here. I'm gonna copy here and paste here. I'm gonna bold everything, and this is going to be equals to this plus this, and everything should be 0, right? Because we just said that the dividends equals to the retained earnings. So let's see why we have a 10. Okay, it's just rounding stuff. That's okay, I think. That's not an issue here. We can basically say the round. Never know how to do it. Let's see if I'm going to get it right. I never know how to use the round formula. Never know which number you should have over here. Let's see if that's okay. Yeah, it's not okay. It should be -1, I guess. Let's see. Okay, there we go. So now we just rounded everything properly, and there we go. Okay, so we have our retained earnings calculated, and what we can do now, we can have a retained earnings open balance, and we can have a closed balance. I'm gonna also copy. Right, so there we go. I think we don't need the sum now, so this is going to be, the open balance is going to be equals to this one, and the closed balance is going to be equals to this plus this. I think here we have to add our empty, and now you just copy and paste everything across. Okay, so that's cool, and we have everything, and there's everything 0 because all the returned earnings being given as dividends, right? So we basically satisfy the condition where, there we go over here, where the cash available for dividends and the returns earnings balance, so where we have the lesser or the equal amounts of the cash available for dividends and the returned earnings. And that's exactly what we have. Okay, so I'm gonna save, Control S, so it's saved, and we're gonna move on now to the next part of the financial statement, which is going to be the balance sheet. Let's go. Okay, so let's gonna start now doing the balance sheet. So I'm gonna go over here, balance sheet, that's fine, and I'm gonna set this as heading number 1. So we're gonna start with our assets. It's gonna be heading number 2, and we're gonna go over here. We're gonna say current assets. This is going to be headings number 3. What do we have? We have cash and receivables. That's what basically we have. And then I'm going to have our total assets. And there we go. So what's cash? So for the cash, we're going to calculate later, okay? Because cash comes from the for the statement of cash flow. So we're going to do that later. Okay, so we're going to leave empty for now. So I'm going to just copy over here, and I'm going to make sure we have the structure in place. I can also, just to not forget it, just highlight the whole row, and there we go. So the receivables, so that's the account receivables. So we're going to go over to project A sheet, and we're going to find our receivables. So that should be this row over here. Okay, it should be how much cash we're going to receive at the end of the period, and that should be this one. Enter, and we have the number, and the total assets should be equals to everything above. Control C, Alt ES formula, and then Alt 2, that's going to be a comma 0, and I also want to have a top border. Very good. So I also want to highlight this one. So we have the total assets down here. We can delete this. Cool. Now after the current asset, we're going to go to the non-current assets. I just want to make sure I have everything capitalized in a standard way. So that's the way we're doing. We don't capitalize whatever the name is. So we capitalize just the first letter of the row. So no current asset, that's going to be Control Z. That's going to be also a heading number 3. And we have the PP, which stands for plant property and equipment. And that's what we're going to have. And I want to just copy this thing, I guess. We're going to copy this. We're going to paste over here. And that's going to be equals to what? So the non-current assets is basically the capex we invest. So we're assuming that's the whole thing as we did for the depreciation. And we can get, I think we have this structure in place already. Let's gonna see where is our depreciation. It should be this value over here. Actually, this one over here, right? So this is the correct one because we start with the 2,600 and we start reducing as we depreciate the assets, okay? So I'm gonna set these as comma 0 and why didn't go? Okay, it's not really 0, but that's okay. That's fine. There's some leftovers, but that's okay. That's the reason why you format your number so that when it's 0, you have this dash instead of having the number 0 as we have here. See, because you can see there's something that's off, right? So there's something wrong here, and it's basically round. So if you just increase the number of numbers after the period, you're going to see that there's a number here, but we don't need to care about this. That we're going to leave as it is. The main point here is just to cut your eyes and make sure that you understand what's going on. Okay, so this is the PPE, and then we have our non-current liabilities, our non-current assets, and then we can have our total assets just below here. It's going to be a total assets. I'm going to just copy this thing. I'm going to paste over here. We're going to make everything bold, and it's going to be equals to this plus this. We copy and paste everything across, and we should be good to go. So this is our total assets. So now we're going to have our liabilities. So liabilities. Okay, that's going to be a heading number 2. And below here, what we are going to have. So we could separate between current liabilities and no current liabilities, but because we're going to assume we're only having current liabilities, I'm going to just lay down everything we have. Okay, so we're going to have here the payables. Then we're going to have the loans. And that's basically what we have. And then we're going to have our total liabilities. Okay, so that's what we are going to have. I am going to copy this and I'm going to paste those things over here. Enter. This is going to be bold, and I'm going to delete everything here. So where is our payables? So the same way we did for the receivables, we're going to find the payables somewhere below here. Close balance. So should be this number down here. Then we're going to get the loans. So that should be the principal. Should be paid, and that's also somewhere over. Let's see what the principal is. I think we're going to have to multiply by -1. No, we don't. It's already negative. Oops, sorry, it's wrong. It should be equals to this one here, column J, right? And then the total liabilities is the sum. We're going to copy and paste across. There we go. And I just want to add a top border, Alt HBP. So by now you should already memorize the shortcut for that one. Okay, so we do also have our total liability in here, but yeah, no, this is wrong. Sorry, it's not this is wrong. This should be the open balance of the debt. Sorry, should be, or the closed balance. Sorry, there we go. But that should be a negative number. Now we are getting the correct numbers. Okay, so now it's correct. We have the correct number right over here. Cool. And then you can calculate now the net assets. So the net assets is going to be, I'm going to copy here. We don't need to have this border now. It can be just both. It's going to be equal to this plus this, and we copy and paste everything across. Okay, cool. So we have our total net assets, which is 11 billion baht, and that's what we have here. Let's gonna do now the equity. So we can come over here, say equity. We can save it as a H2, and we're gonna have 2 times of equity. We're gonna have common stock, or basically the equity that was given to the project, and then we're gonna have the retained earnings. We're gonna have total equity. Okay, so that's what we're gonna have. I am going to copy this one here because it's not bold, and we're gonna paste over here. That's fine. And I'm gonna make this bold. I'm gonna copy and paste the styles. So Alt EST, and there we go. Right. So I also have to copy the comma 0, and now I'm gonna make here a top border. Okay, so let's gonna fix this. We can delete because these are wrong. So let's gonna see the common stock, right? So what is the common stock here? So that's basically the equity that has been given to the project. Okay, so how much equity has been given to the project? That's the first thing. We don't have this information, so we have to add it. So I'm gonna go here on the cash flows. That's fine. I'm gonna have here equity. We're gonna save this as should be heading 2, but should be on column B. Okay, so we're gonna have equity account. So equity account. I'm gonna save it over here. It's gonna be a heading number 2. Then what we're gonna have? We're gonna have a equity open balance. We're gonna have equity infusion. Then we're gonna have, we could have some sort of, doing construction. Okay, we can also have equity infusion during operations, but we are gonna assume there is none now. And then we can have the equity close balance. Okay, so for now we're gonna assume this is none. Okay, so I'm gonna delete it. I just put in here that to know that you have to account for this. Okay, and this is gonna come handy, or this is gonna have to work with infusion during the operations whenever you have a negative cash flows. Okay, and don't have enough cash in the company to pay for the debt, for instance. Okay, so I don't expect in this exercise you have to deal with it, but at least you're going to show to the interviewer or to the company that you know what you're doing. So instead of deleting, one thing you can do just to make it clear that like you have accounted for it but you have done nothing is just to leave it here, okay, the way it is right now. So we can copy. I'm gonna just paste this over here. I don't think we need all. I'm gonna just copy here and paste. I don't think we need neither here nor here nor here or over here, and that's fine. So this should be equals to this, the closing balance, sorry, should be equals to the row below, right? That's it. Here we have to change it. That should be empty, and I'm gonna delete. So we have the open balance. Here is gonna be equals to the sum. That's correct. And the equity infusion should be equals to the equity that we have bring to the project, or have brought to the project, sorry, which is over here, right? So there we go. I think I can copy and paste, Control C, Alt ES formulas, and now we just have to set this up as comma 0, Alt 2 and comma 0. Okay, very good. So we have here, and this is the balance that we're going to have. So I'm going to go back to the project financial statements, and I'm going to say this is going to be equals to control page up to the close balance, right? And then we copy paste everything across, and we have the number. Very good. I don't think it makes sense to have this number here. The retained earn is going to be equals to this number over here, and this is going to be equals, enter. I'm going to copy and paste everything across. Okay, looks pretty nice. Right, so we do have our equity over here. Now what we have to do is to calculate the total liabilities and equity. I'm gonna say total liabilities and equity. Good. So I'm gonna copy over here. Let me copy above. I think it's just easier. I'm gonna paste it over here. I also want to copy this number. That's fine. So what that will be equals to the net asset minus the total equity. Okay. And we're gonna copy and paste. And there is some problems here, right? Why? Because that should be equals, right? So the total liability should be the sum of the total liabilities and equity should be 0 because that's what the balance sheet is all about, right? But it's not. But we gotta remember, right? We have to bring the cash over here. We don't have that yet, so that's gonna hold on for now, and we're gonna keep this yellow because we have to check that out. So once we plug the cash here, we should have a balanced balance sheet. Okay, so we're gonna move on now. We're gonna start doing now our statement of cash flows, and as the end result of it, what we're gonna have the cash balance, and that's gonna be plugged into the balance sheet. So let's gonna do it right now. I am going to copy here. I can go over here, paste, and that's going to be the statement of cash flow. This is fine. So we have 3 cash flows basically, right? So we have cash flows from operating activities, from investing, and from financing. So that's what we're going to do now. So cash flow from operating activities. Okay, we're going to get rid of this O here. We're going to set this as, sorry, Control X. We're going to paste this here. It's going to be an H2. So what we're going to have here, so we're going to have our revenues. Then we will have our operating costs. We're going to have tax paid, interest on that, and working capital adjustments. So that's what we're going to have. Then we're going to have our net cash flow from operating activities. Right, so we're going to make this bold. That's good. Let me grab the infrastructure we're going to use. We're going to copy, and we are going to paste it. Right, and this one here is going to be bold. And that's it. So we can delete these things here. Very nice. Okay, bold. Cool. So then we are going to have our cash flow from financing activities. It's going to be an H2. What we're going to have? We're going to basically have the capex. There is nothing else here, right? So this is the only thing we have, and that's the capex we invest in the company, and this is the financing. Investing. Sorry, from investing. I kind of, yeah, it's not financing. It should be investing because finance comes later. Now comes the financing. So it's going to have here the financing activities. What we have? Basically, we have our equity, we have our debt, we have our principal, and we're going to have the dividends, right? Dividends. That's the last one. And then I'm going to have the net cash flow from financing. Okay, so we have most of the structure in place. Let me continue building the structure here. So what we're going to have later on, we're going to have the net cash. It's going to be the net increase or decrease in cash. Okay. Then we will have the, let's say, the open balance of the cash. So cash is going to be a cash balance or open balance. Then we are going to have our cash balance close. Okay, so that's what we're going to have. Let me now just copy this. and we should be ready to go. I'm gonna paste it, and I will paste it over here too. Let's see, Control Y. What's going on here? Let's see. Control V. Okay, cool. So we have everything we need for now. Very nice. So the structure is ready. Now just have to plug in the numbers. So what is the revenue? I'm going to get the revenue from this sheet. There's no need to go back to the previous one. Then we have our operating costs. That also should be here. No, we don't have that in here, right? So let's going to add them together. So it's going to be equals to the sum of these numbers here. That's fine. The tax paid, I think we should have it over here. Then we're going to have the working capital, sorry, the interest on that. We have the interest payment over here. Then we have the work capital adjustments. I don't think we have that in here. We have to bring this from here. So that's the adjustments we have to do. And then we have the net. Okay, so we're going to copy and we're going to paste it. Okay, I have to set as comma 0, and that should be it, right? So Alt HBP to have a top border, and that should be the case for us. Very, very good. Let me see. Yeah, so that's pretty much it. So where are we going now? Now we are going to go to the capex. So where is the capex? Well, the capex is going to be just over here, and we have to have a negative capex. So we're going to get this one here. That's the capex, and we're going to paste, and we're going to make this not bold but normal, right? Okay, cool. So the net cash flow from the capex is going to be equal to the above. Control C, enter, and then we're going to have Alt HBP, and there we go. Okay, that's good. Now we're going to get the information we have here. So what is the equity that comes to the project? So the equity is going to be over here. Where is it? It should be a bit more down. So we have the equity and the debt. So I have the equity now. We can press Ctrl D to get the debt. Okay, so this should not be kept bold, except for this one here. Okay, so cool. Now we have the principal payment. We can get that from here. We brought it up. Let's see what that is. Principal. It was over here, right? Oh, no, we don't have that. No, we don't have that in here. So we're going to bring the principal should be over below, right? So where we calculated the debt, so it should be over here. Then we have the dividends. Let's gonna grab the dividends above here. We have that over here, and then we're gonna have the net cash flows. Okay, cool. So I'm gonna copy, I'm gonna paste, and then we're gonna just add the top border, and that should be it for the financing activity. So we have the net cash flows for the invest, and then we have the one for the net cash flow for financing. Okay, cool. So we have everything in here. So what should we do now? What's next? Let's see. It's odd here, and I was just looking for a mistake. There's a mistake here, right? So we're not adding everything, okay? Because I was already looking, this number here, we should have positive cash flows coming from the operating activity, and I haven't spot that. So I don't know, when I press Alt equals, it's not getting the whole thing. That's very, very, very weird. The same here. I have no clue. So let me delete. Yeah, I have no clue why. It's very strange. So you see, it never came across this mistake before. Now I'm going to fix it. I'm going to Control Z, Alt ES formula. Okay, now it seems to be correct, and we have the correct number. So what is the net increase, decrease of cash? So that's going to be equals to the sum of this, then this, then this. Okay, so that's what is going to be the net cash increase or decrease. That's good. Then the open balance is going to be equals to this plus, sorry, going to be equals to this number here, which is the closed balance. I am going to have this as empty, and then the closed balance is going to be equals this plus this. Okay, So there's a mistake here, right? So what is this one? Oh, this should be 0. Yeah, that should be deleted here. Okay, cool. So I'm gonna copy and paste, and we should be ready. This should be correct. No, there's something. Yeah, that should be correct, right? So I'm just going to unbold those, and I'm just gonna have to have a top border. Okay, so this is the cache that we're looking. And if you look here, you see the 70, we have the 70 here, 178. So the number should be correct, right? So now what we're gonna do, we have to plug in here. We have to say this equals to this. And once we copy and paste everything across, roughly the balance sheet is going to be balanced. So we paste, and yeah, let me just do the comma 0. And yes, essentially the balance sheet has been balanced. There is 249 here. Let's see what's going on. It is rounding numbers, basically. Yeah, we have some rounding numbers. Let's see if that's correct or not. So let me see what's wrong here. There has to be something wrong, right? Because this is too much already. Okay, so let me double check this and I'll come back. Okay, I found a mistake. There is a mistake here in the returned earnings calculation. So if you go back here in the equity and under the returned earnings, I referenced before, let me just go back because that's what we had. So before we were referencing the returned earnings over here, but what we have to reference is the closing balance of the returned earnings, okay? So let me just get this one here. And there we go. So we should refer back to the J31. And if you copy and paste everything across now, we're going to see that all the balance is correct. There's nothing wrong in here. Okay, so it's 0. So now we are correct. I am going to basically not fill this one here. And I'm going to select, I'm going to press F4. Because that was the last comment where I unfilled or no fills for the background. Okay, so I think now we have everything pretty much correct, and we are done basically, right? So we did project A, the financial cash flows, and then we calculate all the financial statements. And if you manage to get the balance sheet to balance, pretty most likely going to be all right to go. Okay, it's very unlikely. I've never came across a situation where I built the financial statements wrong and the balance sheet was correct. That never ever happened to me. So I think that's a good sign that you're good to go and that your financial statements are correct. Okay, so basically here we have done project A completely. Now what we're gonna do is to do project B and project AB. And if you have followed through the whole video, it's going to be very easy for us to do it now. So what are we going to do? We're going to basically copy and paste things across. But before doing that, I just want to, let's gonna do it right now because I think it's easy, right? So I'm gonna select the 2 sheets down here by pressing Control. Okay, so I'm gonna go back. I'm gonna go to project A. Then I'm gonna hold Control and I'm gonna click on the FS project A. I'm gonna keep holding Control and I'm gonna drag it to the side and unleash. Sorry, let me do it again. I'm gonna just go back to the side, see? And then when I release the buttons, it says name console already exists. Click yes to use that version of the name. Click no to rename it. We're gonna click yes to everything. Yes to all. So now we have the copy versions, right? What do we have to do now? First, we're going to rename. So we're going to double click on the sheet. That's going to be B. We're going to double click over here. And that's also going to be project B. Okay, so, but yeah, except that this should still be A. The one that I have to rename is this one over here, which should be B. Okay, another thing that I'm going to do now, I'm going to select again both sheets. I'm going to right click on top of it. And I'm going to change the colors. Okay, so this is going to be, let's say, light green. And this is going to be, let's say, light red. Because then it's quite easy for you to identify that there's 2 groups of products, okay? Again, everything's about visuals. So we know there's a cover, there's an input, there's a tag, and then we have like 2 sheets that belong to the same group of projects. Very easy to identify. Very good. So what we have to do now, we just have to do a very simple thing, because if you remember, everything that changed from project A to project B has been named. Okay, so all these cells, they have a name, and they all finish with project A or project B, right? So what I have to go to do now, I have to go to project B. We're gonna copy everything here. I'm gonna press Ctrl C, and we're gonna change it by pressing Ctrl H. We're gonna access the find and replace window. So that's gonna pop up. We're gonna paste this as find what, and then we're gonna paste below here and change. Instead of replace with, it's gonna replace with project B. Okay, that's gonna find all, and we're gonna see here that it found every single cell that finishes with project A, and once we replace it as we just did, so everything is project B. Now we switched everything from project A to project B, so everything that's being calculated here now refers to project B. Okay, so let's gonna see what the returns for this project B is, and we are going to get that just below here. So it's 15%, right? And for project A is going to be, where is that? So it's going to be 17%. Okay, so there we go. So we have project A and project B, right? Now in the financial statement, we have to do something different, because here, if you see, oh, that's right already. So everything is already referring back to project B. So even this financial statement here is already referring back to project B. Okay, so there's nothing to do. If you copy and paste the project B across, and you still see project A here, reference back to project A, what we have to do, we have to come over, select everything, Ctrl C, and do the same, Ctrl H. We're gonna go find everything that is project A and replace with project B. Okay, so everything's about copy and paste, nothing more than it. Okay, so that's it. So just make sure that every single cell here refers to project B, and that you have here all the named cells referring back to project B. Very good. So now we're going to just do the same. We're going to select everything. We're going to drag. We are going to drag everything to the side. Again, this annoying thing, we just press yes to all, even though it doesn't go to everything. So just keep pressing yes. Okay, cool. So everything is done. Now I just want to double check here if there's any mistakes or any problems with any ref errors in the formulas, and I guess there is not. So everything was copied properly. We're going to rename it. So this is going to be project AB. Okay, this is project AB, and this is also project AB. Very good. I'm going to check here because I think everything was already transferred or renamed to project AB, which is pretty cool. Now the only thing, what do you have to do here? So here you have just to be a bit more careful. Okay, we're gonna change now. Let's see, we're gonna copy this portion here. We're gonna press Ctrl H. We're gonna paste it, and then we're gonna replace it with AB, because that's what we have done before. So it found 7 cells, exactly the same number of cells that we had before, and we're gonna replace it now by pressing replace all. There you go. Okay, I think let's gonna check now all the inputs, right? So this input here doesn't matter, it's the same one. This one here is AB. This one here, degradation, is the same one, doesn't matter. We have revenue escalation. This is the revenue, that's fine. Personnel cost, this is the one here that I think we have to change, because there is a discount here, remember? So we're gonna go to the inputs, and we have a discount for the personnel cost. Let's see, here we go. But there's no name, see? So we just have to refer back to this cell here. So I'm gonna press Ctrl C, I'm gonna copy it, I'm gonna go back here to project AB, and where we have it, I'm gonna press Alt ES, and you see here, there is paste link. So if I press L, I just paste the link to the 13 here, okay? So that's correct. So this one here is the multiplier, look, that's correct, which is the escalation. That's AB already. The inflation rate, that's already AB, we can see here, good. This is the escalation, nothing to be done. AB, inflation. So what is that? The total community fee, it's based on a megawatt hour, so we are fine because the revenue here is being calculated already on the total generation, so we are fine with that one. This is retirement cost for AB, that's good. This is the inflation rate. So total capex is AB. Okay, there is no need to change here. This is the internal formula, that's okay. So nothing here. The 15%, the hurdle rate doesn't change, okay? So we have here is the tax rate, doesn't change. Okay, we have AB, we have the calculation, the same depreciation years, nothing changed, the tenor is the same, the interest is the same, and I think we're pretty much done, right? So everything here is the same. So we are done, basically. So now we already have the 3 projects. The only thing I'm gonna do now, I'm gonna just change the colors to be a light blue. And then very nicely, we have the 3 projects and the financial statements for each one of them ready to go. And basically we finished our financial model. That's done. We are done with it. Now basically what we have to do is to proceed with the analysis and nothing more to it, and which we're going to do right now. Okay, so congratulations, we have basically done all the mechanical things that we have to do, and let's going to proceed now to make an analysis, right? Because there are a few questions that we were asked and that we have to address now. But before we go there, I just want to do something just to make your life easier, okay? And I think you can even leave what I'm going to do here as part of your work. Okay, so what I'm going to do now, I'm going to write over here project A, then I'm going to copy these things. Going to be project B, and then project AB. Okay, and I'm gonna link here now. I'm gonna just add one more row. Okay, I'm gonna unfreeze the panels by pressing Alt WFF, and I'm gonna go to the first row, select everything, and I'm gonna press Alt FF again just to freeze it below, and I'm gonna link here now to the RR of the projects. Okay, so I'm gonna go here, project A, and I'm gonna link to the RR, which should be just this one here. Very good. So now I'm gonna just set this a percent. I am also going to anchor it absolutely, okay? And I'm gonna do it as an external calculation. So I'm gonna copy and paste across, and instead of going here and searching there where the cell is, I'm just gonna change here for project B. So you have to be clever on the way you name your stuff, because then it's much easier for you to look up for it and to address it, right? So here we have the projects RRR, okay? So that's basically what we have. And let's gonna go back now to the exercise and see how to answer the questions, right? So let's see. We can go here, and I have this over here. So here we go. Okay, so we're gonna see the questions, right? So build the complete 3 financial statements for project A, B, and AB, which we do have. A template was provided, but we did everything from scratch because it was a very simple template, and we couldn't use that from scratch. Okay, so consider project A in isolation. What is the NPV? So we have the NPV on row for each one of the projects. We have the NPV and the equity RR on row 96 and 97 for every single project. Okay, so again, the other benefit of copying and paste and changing the names is that we're going to keep every single row under the same number. Nothing changed, so it's very easy for anyone to troubleshoot and then look for the information. Okay, so that's another reason why I have to be very thoughtful on how you're going to structure your financial model in order to make it as easy as possible for you and for others. Okay, so that's another benefit of having this sort of structure. So what is the NPV and what is the RR? And based on this information, do you accept or reject the project? So how do we accept or reject the project? Right, based on the equity hurdle rate, which was 15% over here. Okay, so that was the equity. So do we accept or do we reject? So let's gonna go back here to the inputs, and we can see here that each one of the project is above the 15% threshold, right? So in principle, we would accept it. No questions asked. Okay, we would accept project A, we would accept project B, and we would accept, of course, project A and B. Okay, so that's the first point. I'm gonna go back here now, and they say they also want us to look into the, where is it? Okay, they also want us to look into the NPV, right? And if you go and look on the NPV is a positive number, okay? And if your NPV equals to 0 or greater than 0, that means you're achieving your minimum IRR requirements, okay? So because the NPV is positive, you would accept the project, and you can basically, we're just checking whether the project would be approved or not through two different calculations, okay? So that's the answer for the first 3 questions over here. Sorry. Okay, cool. So we have this one here. So given two difference of project A and B that the BD team or you should look into in order to potentially increase the returns, right? So I've think through a little bit about this one. Okay, I think the first one that came to my attention was the capacity factor. Okay, so they might be in different regions. Okay, but why they have such a different capacity factor, right? So that's a major driver, and of course, then why they have different capex, right? So why are not able to get the same capex for project A and B if we were to consider that the two turbines are completely the same? Okay, so that's the first one. But because it's wind, it gets more complicated because there's a lot of geological constraints and might have to have a much bigger foundation for the project A and project B. But that can be a consideration to look into. Okay. This another one that I was looking at is in fact on the community fee, and I'm just gonna find it. Let's gonna see. So here it is. Okay, so why are we paying so much the community fee? So if you go here and calculate, it's gonna be 0.25 divided by, we have the by 4, so it's 6% as community fee. That seems quite high to me. Okay, I would imagine a very much lower number, that's for sure. Okay, other than this, and this can be quite heavy on the project. Okay, so we're giving 6% of our revenue away as a community fee. Okay, so that would be another one. So I think these are the two ones that came out on me. Okay, I think there might be some other, we might be able to reduce a little bit more maintenance costs because we can find some synergies here. Okay, and some other minor stuff here. Okay, I think the generation is okay. So, but I think it's the only ones, right? So for now, I think, oh, there's one more, sorry. So I think another thing that it's very important, by the way, that we would consider to increase the project RR and PV, it is how we are getting the dividends paid back, right? So the instruction here was to give it based on the minimum of the net income or the retained earns and the cash flow available to equity. Okay, and what I'm gonna do here right now too is to show what if we were able to distribute. Let's see what the calculation is. The calculation is over here, right? So we can see here, right, that the net income is much lower than the dividends or the cash flow available for dividends, right? So what if we were able to pay the full amount available to equity investors as dividends, right? So I'm going to do it right now, and I'm going to see how that will change quite drastically the RR. Okay, so let's going to do it for now on project A. Okay, so we have 16.53%. So what I'm going to do here, I'm going to scroll down. I'm going to say pay dividends based on retained earnings, question mark. And what I'm going to do here, we're going to have a true or false statement here. So I'm going to just do like this. I'm going to go to tech. I'm just going to set true. It's going to be false. I just want this to be normal because Excel recognizes it as different than, let's say, equals to, I think, no, right. So this doesn't work. Let me see how to do it. Okay, it's still doing the same. So let me see if we can copy and paste here. Okay, I think that worked. So now we just have to go over here. Okay, cool. So this is going to be true. This is going to be false, right? And then I just have to set this as input. I'm going to name the range now. You can do it. Okay, true and false. Okay, so I named this range now, and now I'm going to go back to my inputs. I'm going to go to data, and then we go to validation, data validation. We're going to go to list. We're going to select the source. We're going to press F3, and then you can type true and false. press OK, and we're gonna have your true and false here. Okay, so we're gonna be able to choose between paying dividends based on retained earnings or based on the cash flow available from the project. Okay, that's what we're gonna do here. So we have this switch. I'm gonna go back here to the project, and I'm gonna have this switch over here. So I'm gonna say equals to the switch over here, and that's true, right? So what we're gonna do now, we're gonna say if, let's see, if what? If this is true, I'm gonna press F4. Let's do it again because I press F3 instead of F4. So if what? If this, I'm gonna press F4 3 times is true. So we don't need to say equals to true. Then it's gonna be the minimum of the two. Otherwise, I want to get only the cash flow available for dividends. Okay, that's what I want to do. So I'm gonna press OK. I'm gonna copy and paste across the formulas. For now, nothing has changed, right? So we're still getting this from the minimum of the net income and dividends. But if I go here now and set it by pressing Alt page down and set it to false, you can see here by how much your project IRR increased, right? Because right now what's happening, we are getting not the minimum between each one of the two options, but we're getting directly the cash flow available for dividends. And that's gonna increase by how many percent? From 15, right? So it's 17, 16.5 to 22. So it's 6 percentage point. It's a lot. It is a lot. And there is nothing wrong against doing it, okay? Absolutely nothing wrong. You can do it and you can pay out of the dividends because that's the cash that is available, okay? There's nothing to do with your net income. It's the cash available for you to repay dividends as to the equity investors, okay? So I'm not going to do the same for the other projects. Okay, let me do this quite easy. So I just have to copy, basically, I just have to do this. I have to set this as an external, and I'm gonna copy the whole thing, right? So Control C, I'm gonna go to project B now. We're gonna select, enter. Oh, sorry, I have to copy the whole, okay, let's go back. I have to select the whole column. So Control C, here, enter. Do you want, yes. Okay, I don't think there was any problem, right? Let's see. Yeah, we also increased this one here, and I'm gonna copy and I'm gonna go over here. We're gonna choose the correct row, which should be above. Let's see, no, it's below, sorry, it is below over here, this one here. I'm gonna press enter, and we have the same. So now we have all the new IRRs based on the change the earnings. So that's a huge one. Okay, so I'm returning back and I'm going over there. Okay, so I just want to do one more change here. Okay, I'm gonna go to the inputs. I want to, okay, we're gonna leave these as true, and now I am going to increase a little bit the price or the capex for project A. So project B, let's say it's 1.7. Okay, and now what happens, we have a lower RRR, and the thing here is that the RRR now it's 14%. Okay, one thing they asked us to do is to have this as a whole, so I'm gonna just consider this as a whole. Okay, so right now the RRRs is below the hurdle rate for project B. Okay, and what would you do here? Okay, and if let's gonna go back here because I don't think it really matters whether it's a whole number or not. So it's 14.38%. Okay, so what would you do here? What would be your recommendation to the investment board, okay, or to your director, to whoever you're talking with? Okay, should you reject project B? And if so, why? Okay, so just think a little bit before you listen to what I have to tell you, because I think that's quite important. Okay, that's where you're not gonna get this position by doing the financial modeling, okay, because that's expected from every single candidate for the position. I do believe that, particularly for a junior candidate, we're gonna get this position based on the insights we're gonna have throughout the process, okay, and on the material you're gonna deliver, okay. And if I were you, I would write these things down. So write an essay with all your assumptions, then with the results and how you would go about it, or make a PowerPoint presentation, right? Because that's going to distinguish you from everybody else who will just make the financial model, right? So just think a little bit, pause, and come back here. Okay, so would you reject And my answer to it, based on the experience I have, it really depends. Okay, and that's the answer I would give. Why? So let's see, we are in a scenario where you have 10 other projects and they have higher IRR. Okay, basically, and this is the lowest one. So you don't have a lack of projects to be invested. Okay, so so you don't have, yeah, you have so many projects that you're gonna be lacking investment cash to invest, other than lacking projects. Okay, so you would definitely reject this one. Okay, and essentially what we can do actually, so we would reject this to develop yourself, but maybe what we can do, you're gonna sell it. Okay, sell it to someone else, because most likely you have at or late stage. Okay, I'm telling this very, very late stage, where you have all your payments in place, you have gone through your procurement process, we have done pretty much everything, we're just about to get a financial decision whether to take this ahead or not. So if you don't do it, we're gonna sell it, that's for sure. Okay, but your recommendations basically be, okay, we have so many, we don't need it. Okay, but let's gonna do the opposite now. Okay, you're really struggling with projects, right? And you are in a scenario where, let's assume there is a crisis in your country, or maybe even like a worldwide crisis, but at the same time, like, you're really under pressure to deliver and to show something off. Like, you have to deliver this project, right? So you are in a situation like you have invested. If it's a wind, it's very likely you invest for over 10 years. Okay, since the inception all the way through the stage where you are now about to take a decision. So would you really give up, right? I mean, one option is to sell, because maybe someone else has cheaper capital, and if we reduce the interest rate, and we can do the exercise right now, let's going to reduce the interest rate, let's say where that is. Another company has a lower cost of capital, they might be able to take money for 3% per year, or 2.5 or whatever. So they're gonna be there, right? So that can be one case. Or they even have a lower cost of capital. They are able to get a lower equity IRR. Okay, so they're equity investors. They require, let's say, 14%, right? So you can sell. That can be always the first option, right? But the second option is that you just go back and you see where you can improve. So one aspect you can improve, it's definitely on the wind resource, or on the solar resource, or the water resource, and see if there's anything you can do better, right? Another thing, as you can increase one turbine, you can decrease a turbine. That can be another one. You can go back and talk to the manufacturer of your turbine. You can have a discussion, say, look guys, I need you to help me here. If you give me a discount, let's say if you give me like $500,000 discount, I'm gonna make it, right? So if something, right, so you're so close to get to the minimum hurdle rate that you can really try to do something to your project to improve it, right? Let's say then you have the scenario where you went through everything and you were able to get 14.38%, right? So we already spoke to the supply chain, we already optimized as much as you could your project. There's absolute nothing more. You're bullish in most of your assumptions. There's absolute nothing more you can do. What you do, right? So that's the time where you go to the board and you ask for, look, can we go ahead with this? And they might consider, right? Because they might also be under pressure. You're not so far away from it, and there might be a billion reasons why they would be able to go ahead with this project, right? So that's one thing I would like to present to you. So, and I think it's important that you present this to in your assessment of the project to the employer in a way or another, right? So they ask you to do a financial model, but they will never forbid you to deliver an Excel file, sorry, a PowerPoint presentation with all your insights, right? And then let's gonna say we have this scenario here, okay, where project A is 16.5, project B is 14. So we have the project A is above, the project B is below, but the combination of the two actually gives you even a higher IRR than each project on their own, right? So what would you do in this case? Would you go for both or not? And of course, the answer most likely is going to be yes. And in which case, it might be a no-go for you. It might be a no-go for you if you don't have capital to invest, okay? So if you don't either have the equity or you don't have the the debt available. That's very unlikely, right? So why would you develop 2 projects if you are not able to deliver them, right? Or another option is to bring a partner who has the capital, who has the balance sheet to bring not only more equity but also bring more debt to the project. That can be another thing to do, right? Or if you're really unable to develop or to build the 2 projects, why not to sell it, right? Just sell it. So that really depends on the strategy of the company. And I think if I were to apply for a job right now, I would basically understand how the company operates. So are you a pure developer, or you develop, build, and operate, right? So make sure you understand what the strategy of the company is for the job you're applying for, and then try to fit your answer according to the strategy, okay? And mention it in your presentation, okay? So I think that's all for this project. I'm just gonna go back here to the number we had previously. So that's all. I think it was a pretty long one, but I think this exercise is very interesting because you as a candidate are able to give all these insights to the employer, okay? So thank you very much. Please, if you like what you just learned today, give me a thumbs up and leave your feedback in the comments below. I hope to see you soon. Bye.